Okay. Brilliant. So what we're going to do, I'm going to talk through you guys. I think it's better to use one screen. What I'm gonna do is I'm just gonna close some of the because I want to share the whole of my screen. So let me just close some relevant stuff here. That way when we're switching, it's it doesn't get convoluted. Mm, okay, there we go. Brilliant. Let's see. Okay, so I'm going to start then. Let me just talk through. So thanks, guys, for joining. Now, I know obviously in the community, most of our focus is largely on options, right? Right. So a lot of you guys understand what you guys understand what options are. Okay. Obviously, options essentially are, I think maybe for those of you that are just joining, let's get a refresher so that you know what we're talking about. Because I want you guys to follow this, okay, a bit more clearly, so that way you don't have any gap in your knowledge, okay? It's just gonna pull up. I think for most of you that have seen me do this, you understand how I tend to approach. Okay, why is it not increasing? 5. Okay, 7. There you go. Okay. So let's do this. Then I'm going to share my screen. Just putting out the right stuff. Okay. Okay. Tell you what, where is it? Screens. Boom. I'm just going to share my screen. Okay. So you guys can see all I'm doing. Right. So for many of you, you're super familiar with options trading, right? So obviously, most people here we trade options, right? And I'm going to show you. We'll just talk through this. So if we say options trading, okay, versus futures trading, okay, I want to make it pretty simple, okay. So now, for in options, you are buying a contract that is attached to the underlying asset. So what you do when you're buying options, you're buying a contract that is attached to these stocks. So we're buying SPY. If you're buying SPY, you're not buying SPY as the stock because you can see SPY is £728, sorry, $28.09. So pretty much $729. Yeah. If you want to buy one SPY share, that's expensive. So what options do is you buy what is called a promise, right? Now, that promise, it's an obligation. Okay, so options give you a choice to buy. So if you go to somebody that has one SPY contract, you say, I want to come and buy SPY shares from you on let's say, on the 1st of August. Okay, so around just over a month from now. You say, can you keep one? So if the person has 10 SPY shares, and the person is saying, I want to sell. You go to them and say, actually, I want to come and buy from you, right? On the 1st of August. Okay. So could you keep one aside for me? Okay. Now, what that person that sells, what they're going to do is they're going to say, okay, fine. I don't want to keep it and hold for you because that just means you can change your mind at any time. So what do I get for keeping it for you? You then say to them, okay, SPY is $728 now. I'm going to pay you $100. Then you're going to write me a contract to say between now and the 1st of August, I can come back and buy that one SPY share at a specific price. That price is what you guys call strike price when you're trading. Is everyone following so far? It's super important for you guys to respond so I know everyone is hearing me and is engaged. Okay, I don't want to run the class with people just doing something else. If that's the case, then you can always listen to the recording. But I want to make sure everyone's following. So
yes.
Good. So you say to the person, okay, I'm going to come on the 1st of August and buy that share from you. Could you keep one aside? You have 10, keep one aside for me. I'm going to come on the 1st of August. Okay. The guy goes, okay, fine. I'll keep that for you. I'll hold $100, right? That's the contract price you pay. You pay $100, telling the guy that you're going to keep the person that owns the share, the SPY share will keep one aside. He will sell the other nine or whatever he wants to do, you can do with the nine, but he's kept one aside for you. That contract he's written for you is the options you're buying. That's why if SPY is showing that the cost of SPY, if you wanted to buy SPY options on Monday, right? This is the price that SPY closed on, 728.99. If you wanted to buy a contract on Monday saying that, okay, hold that contract for me, on Monday, I'll come and buy. Instead of paying 729, right? You pay $509. Sorry, 524, assuming you were buying it before the market closed. Now, this is the interesting part. Yeah, actually, I think this is, what is this? This is not SPY. This is yeah, it's SPY. Okay. But then what's happening is inside each contract you buy is not one share, it's not one SPY share, it's 100. Okay. Each each SPY contract, each SPY options contract contains 100 shares. Okay, each options contract contains 100 shares. Okay, there, right? So in the standard equity market, a single options contract represents the right to buy or sell 100 shares. Okay, so when you're here and you're paying $524, you're not paying for one. You're paying $524 for 100 shares. So essentially, what you've told the guy is the guy has a bunch of shares. You say, keep 100 from me because 100 is the minimum you can buy. You have 100 shares kept to the side for you. And then you pay the guy $524 to keep those 100 shares instead of paying, say, the full price because it will be 728 times 100. Okay, 7,280. Sorry, 72,800, whatever it is you're going to pay. Right? Am I correct with my maths? 729, okay, times 100. Yes, 72,900. Instead of paying 72,900 for 100 shares, you pay 524. They keep that shares, okay, on the side. You buy that at this strike price. So you're telling the person, could you keep 100 shares for me? Between now and 1st of August, I'm going to come and buy from you. Now, the contract they write for you, you have the right to buy it. You don't have the obligation, so you don't need to buy it. Now, if you don't buy it, if you change your mind, what happens? You lose your $500. So from now until 1st of August, 4 o'clock, 4 p.m. when the market closes, yeah. I'm giving an example. You pay that. That's assuming this is the price. But let's go to 1st of August specifically to see what the cost would be if you wanted to buy. So next 45 days, yeah. That would be, why can I select the dates? Hold on, I should be able to select specific dates. There we go. So you went to the guy. Okay. Why is it August 7th? It should be August 1st. Anyway, let's just say we went for July 31st. So currently, at the current market, if you went to somebody that has a bunch of SPY shares to say, I want to come and buy between now and the 31st of July, could you I would come and buy 100 shares from you. Okay. Can you set them aside? The guy will go, fine, sure. 100 shares at current trading price, it will be 72,900 because it was 70,890 and 999, whatever. So we'll say 72,900. Okay, they'll keep 100 shares. But what you're going to pay is 1,938 because any price you see here is actually times 100. So sorry, what is it? Yeah, you've got 100 shares there. So 1938 times 100 is 1,938. That's what you're going to pay. Okay, so that's what options are. That's what we're trading at the moment. Now, what happens is if you pay for this price, if SPY starts to go up, so Monday market opens, SPY went to 729, 730, 731. The higher price go, the more valuable your options price is because that means anybody that wants to buy SPY on the 1st of August at 7 to 8, the value is already higher because current price is 7 to 8, but then say Monday morning, market opens at 7:30. It means that SPY has gone from 7 to 8 to 7:30. That's nearly 2 points, right? So this value will go up from 19 to maybe it will go up from 19. It will go up from 19 upwards. Now, we can also calculate how high it will go. That's what delta is. Delta will tell you how much this will increase if SPY goes from 128. Let's say this was 129, okay? And it goes from 129, what can I say 1? It goes from 729 to 730. 1938 would increase by 54 pounds. $54. So it will go 1398, it will jump up to 1354, blah, blah, blah. Your price will be increasing. Delta tells you the increase or decrease in your contract price if the underlying asset moves up or down by $1. So if you buy 729 and price spike goes from 729 to 730, this that you bought 1938, right? It would move by 0.54, which is about 54, 55, like give or take. But this is not constant. This changes as well. The higher this price goes, the higher your delta changes. And you can also calculate how far it would change, how much it would change. That's what gamma is. It's not shown here. I can add gamma. Where is it? Let's see. Yeah. Gamma tells you by how much, right? This will change. So the rate, once this is moving, 54 will change by 0.012. So if you multiply that by that, that's what this is going to change by once this moves from 729 to 730. So all of this mathematical stuff happens. You don't really need to worry yourself about this because this happens automatically. I think one of the most important thing to look out for when you're buying options contract is the dates. I think you need to make sure that you give yourself ample amount of time so that your trading plan will sort out, right? And then you move forward. Now, I know why I wanted to spend about 15 minutes talking about options because that's what we trade a lot. So I want people to understand what we're doing, okay? Now, the reverse is the case as well. If you think it's going to come down, you buy puts, right? If you wanted to buy puts expiring on the 31st of July, currently the cost is 1,155 because it's 1155 times 100. Because remember, inside each contract is 100 shares. Okay, so that's what you pay. Now, if price starts to go down, then this value would increase by 44% by $44 for every 1 point this moves towards. So if it drops from 728 to 727 to 726, it will be increasing by around $44 for every move. Okay, and then the gamma will tells you how much this will change. Usually 12 to 13, 15 gamma is pretty decent. You can see it sticks around those areas. That's what options are. But what we're talking about now is futures. Okay? So futures essentially is, when you buy options, you have the rights, but you don't have the obligation. So what does that mean? This is very key. This is the difference. This is the main difference between futures and options. So when you buy SPY options from the guy, yeah, between now and 29 July, when we selected, so 31st July, sorry. If you decide to go and buy, so if you decide to say, okay, fine, I'm going to buy SPY then, because maybe the price has jumped up from 729 to say 750, which means it's jumped up by about 23, 24 points. When you go to buy SPY, if you say, okay, I want to exercise my option, the person that kept those 100 shares for you, they have to sell it to you at 729. But if you don't exercise it, then it will just expire. Okay, it would expire and you just go about your day. The other person, the owner of the shares will go about their day. They didn't sell it, you didn't exercise your option. That's why it says here you have the rights, but you don't have the obligation. So options provides you the rights, but not the obligation. You're not obliged to buy it. Okay? Futures, however, is different. Okay? Futures require both you to transact an asset at a predetermined date. Okay? So now what happens is futures all have expiry dates. Okay, so expiry, if you say futures contracts expiry dates. I'm going to go into my notes, but I want to show you guys this. Okay, so futures have expiry dates. They expire in March, June, September, and December, typically every third Friday. So what happens is, unlike SPY options contract or IWM or QQQ or CrowdStrike or Google, NVIDIA options, when it gets to the expiry date, if you don't sell the contract or if you don't exercise the contract, it will just expire worthless. Okay? Futures, on the other hand, if you buy it and it gets that expiry date, okay, if you do not exercise the contract by either selling the futures contract, right, or exercising it, it would automatically exercise itself when it gets to that expiry date. So you can't run away from it. Okay, it would exercise it for you. There's nothing to do. So say, for example, you went and bought crude oil futures. Okay, so you say crude oil. Okay, so futures. You bought crude oil futures. I think it's like it's calculated by barrels or something like that. You buy it, CL. Okay. If you buy CL expiring on the third, which is going to be it was last weekend, right? Last weekend where contracts expired. If you did not exercise this was so 1, 2, 3, 19th. If you did not exercise the contract by selling it in your home address, they would have shipped a barrel of oil to you. They will call you and say, hey, please let us know where you want us to deliver your barrel of oil. So super important for you to sell your options contract when it's coming to the expiry date. Or you can buy futures that is a rolling contract. It just rolls over. Okay, so this is the difference. I wanted to make this very important. Options, you have the rights, but not the obligation to buy or sell an asset at a price. So you pay for that contract that says at a specific date, if you want to come, you can get it. Futures, however, once you buy, it's a good idea to sell the contract before the expiry date or pay attention to buying only the contract that is rolling over. Okay, so those are the two important stuff. Of course, in options, you pay a premium. That's the contract price you're paying. With futures, you don't pay the full value upfront. You deposit an initial margin. So you're trading with margin, okay? Which is typically a fraction of the contract. Now, when the expiry date reaches, they will send that to you and they will send you a bill for the full value. Okay, so that's what it is. Now, obviously, as I mentioned in our Friday call, options, the most important thing in options is actually the time. The closer you get to the expiration of your contract, the more volatile the contract is. Not volatile, the more value it loses. So you need market to then move super fast for you to be in the money or be profits. That's why I always recommend that you don't trade 0DTE because the risk is too high. You can trade 1 week contracts or 2 weeks or 1 month because he allows the trade to play out. Obviously, the trade-off there is that it's more expensive. Okay, so that's how it works. For futures, it tracks the price of their underlying assets without time decay. Okay, it's simpler to manage, but it's super volatile. Now, you can trade futures. Most platforms allow you to trade with like $5,000. Some will say $2,000, but they got margins very tight. So it's super important to do that. But we'll talk about that towards the end of our session. Okay, so does everyone now understand the difference between options and futures? Huh? I'll give you some time to respond because I know obviously there's probably a lag.
Yes, we muted
Yes.
because we muted.
Yes.
Text to
Okay,
speak.
good. Amazing, brilliant. Thank you. I want to make sure everyone's following. Okay, so options, you're paying for the premium. Futures, you're paying a margin of it. Options expire when you get to the date. Futures don't expire. You then have to commit. So what that means is you need to sell your futures contract as time is going. Now, so let's switch here. I'm going to give you some idea of what it looks like. Okay, so there are a number of futures you can trade. Like as with anything, you can trade oil, you can trade corn futures. Okay, this is corn futures. You can trade Bailey, I think, or barley, sorry. Okay, they use barley to make beer. You can trade that. You can trade copper. Okay, you can trade gold, of course, right? You can trade the S&P 500 futures. So S&P 500. Okay, you can trade that futures. Yeah. So you can trade any equity that exists, any index that exists. You can trade the future of it. Now, what are future markets? Okay, are futures markets. Okay. Futures is similar to options because futures essentially is you're trading where you think the market would move to. Okay. So futures is essentially telling you you're looking at where the market could potentially move to. Now, futures are quite accurate because if you look at futures, say for example, let's look at um, the S&P 500 futures, which is ES. I think most people hear me. I use the word ES a lot in our comment in our group. So your ES is the S&P 500 futures. It's written there, ES there. Okay, the symbol is ES. You see 500 there. You see 500 there. You can see 500. This is SPX, but we're focusing on ES. If you look at how futures move, let's say, let's do both 1 minute. This is towards the end of the market. Okay, they all mirror themselves, right? This candle is this candle when market was closing. Let me make it smaller so you can see. So this is the futures. This is SPY when SPY opened. If you remembered, if you were on the live call yesterday, we were watching SPY to break this level, right? This level when market opened. We're watching here price to break, and by 10 a.m. it broke. We missed it, but then we took the next one here, which was the one that we rallied and then took profit, right? It's the same thing here. You can see when market opened, right? So this is 9:30 a.m. This dark background is 9:30 a.m. This dark background for SPY is 9:30 a.m. So futures, 9:30 a.m. Market changes from blue to dark color. SPY, the same thing. Even pre-market, it's similar. Now, the futures market runs 23 hours every day. So it starts from 6 p.m. US time, so EST, which is 10 p.m. Nigerian time at current what's the word? No, 11 p.m. Nigerian time, which is the current summertime, because obviously clocks go forward and backward. So, but I think if you have on your phone or your watch, if you set Eastern Standard Time, which is EST, New York, futures open 6 p.m. in the evening and runs until 10 p.m. the next day. Then it will close for 1 hour and then it will open it. Sorry, it runs to 5 p.m. Eastern time the next day. Then it will open it. It will then close for 1 hour to reset and then it opens again. So I'll give an example. Market will open on Sunday, 6 p.m. Eastern Standard Time. So EST opens on Sunday, 6 p.m. Market will stay open until 5 p.m. Monday. So 23 hours the market is open. Then it will close for 1 hour. Then it will open again on Monday evening, 6 p.m. And then it will run. So I hope that's super clear for everyone watching. Let me do this. Right, let's see London. So no, I'll change this. All right, I don't want to faff about. But anyway, see New York. Right. So currently it's 11:30 a.m. in the morning. Tomorrow, Sunday, when it gets to 6 p.m. on tomorrow, Sunday, futures will open. Now, interestingly, 6 p.m. New York time aligns with, I think, 7 or 8 a.m. 8 a.m. or 9 a.m. 8 a.m. Asian time. Okay, so if you do, let's say Tokyo, right? So Asian markets open. So you can see it's nearly 12 hours. So 6 p.m. 6 p.m. New York time is around 7 p.m. Tokyo, but it's already 8 a.m. in Sydney, right? So Asia market opens 6 p.m. New York time, which is 11 p.m. Currently 11 p.m. London time, which is the same time as if you're in Nigeria, it will be Lagos. I'm just wanting to give you an idea. You'll capture this later, okay? So you can see London and Lagos have the same time because we're currently in the summertime, British summertime. Okay, so market would open tomorrow, 11 p.m. London, UK, and Nigerian time. Okay, which is 6 p.m. New York time. It would open for 23 hours. So it open at 11 at night. It will go all the way around, come back to 2:30 when market opens properly, and then runs again until 10 p.m. Close for 1 hour, you open again, and then it does. So futures are open. The futures market is open for 23 hours. Now, what people do typically, they would target that when market opens at 6 p.m. New York time, which is 11 p.m. Nigerian time or UK time, all the way until 8 a.m. the next morning in UK or 4 a.m. in New York. That's called Asian time. So Asia trading hours, okay? Asia trading hours or Asian session, right? I think it's easier. Asia session, okay? 23, this is for UK, right? So it runs 11 p.m. to 8 a.m. the next morning. Okay, that's what it is, right? This is the time it runs Asia session. Then the London market will open. Okay, that time at 8 a.m. is when the London Stock Exchange opens, Frankfurt is fully open, Paris stock market is open, and the stock market in Milan is open, right? But they call it London session. Okay, the London session. It opened from 8 o'clock in the morning all the way to 5 p.m., which is lunchtime in New York. Okay? But what would happen is it would run from eight in the morning until 5 p.m. But as we all know, by the time it gets to 2:30 p.m., New York session open, right? New York session would open. Okay? Which is, I mean, in the summertime it's 1:30, but obviously market opens from 1, but officially, sorry, it opens, they're using this is before summertime, but normally it would open from 2:30, it would run all the way to 10 p.m. So all of these sessions, they overlap each other, right? They overlap each other. So futures market opens this then. So that means you are able to trade futures before the full market opens. So you can trade futures, if you're in Nigeria, you can trade futures from 11 p.m. at night until 10 p.m. the next day. So 23 hours. Same thing if you're in the UK. If you're in New York, you can trade from 6 p.m. the previous day to 5 p.m. the next day. In London, you can trade from 11 p.m. the previous day to 10 p.m. the next day. So that's what it is. Okay. So futures opens longer. You can trade. So if you're looking at your chart, once it hits, if you're in London, if you're in the UK or in Nigeria, once it hits 11 p.m. on Sunday, you will see this chart will start to run, the futures chart. Okay, so that's what it is. Now, futures essentially just mirrors the market. It gives direction to where the market would likely head to. That's what it is. That's what futures are. Okay, and in most cases, it actually does. So me personally, when I trade, for example, when I trade options, I tend to track the market on futures. I think eventually most of you will start doing the same thing. As you can see, you know, futures, the S&P 500 futures, which is ES, opens, goes up, consolidates, goes higher, retracts back, and then we have, before market close, we had this dip down. Similar thing here, you can see, with SPY. Opens, consolidates, breaks out, which is this one, consolidates here, breaks out again, which is here, breaks out, and then retracts, and then towards the end of the day, you had that killer candle that went all the way down to 716. Okay, before it retracts in like 30 seconds, which is this one as well. So futures tend to track that. Okay, now not only do we have the S&P 500 futures, we have the Russell 2000 futures, which is for people trading IWM. Okay, the Russell 2000 tracks IWM. You can see the same thing. Market open, maybe push, consolidation, and then continuation. Market open, big push, consolidation, then continuation. It rallied to the downside before close, and then bounced up. Rallied to the downside, and then bounced up. They're the same thing. For QQQ, NASDAQ futures is what QQQ is tracked by. There we go. Similar, same thing. See, same thing. Open the market, goes up, consolidates, dips down, goes back up. Same thing, open, consolidates, up, consolidates, down, go back up. Market close, boom to the downside. Market close, boom to the downside. Same thing. You have gold, of course, right? So you got gold futures, right? Which is GLD, right? So you can see that. Similar, okay? Market open, push to the upside. Market open, push to the upside, consolidates, and then rally to the downside, and then one push before market close. Rally to the downside, push before market close. Same thing, okay? These are what futures are. Is this clear for everyone? Yeah? Before we go into this. So I've spent about half an hour trying to build context. So now we can go ahead and look at and fully understand futures as a trading. Okay? Is everyone still following?
Yes, we are following. Yes, yes. In the chat,
Amazing,
please.
amazing, amazing. Good. I'll check in the chats. I just want to build momentum. So in case you're asking questions, and if I can answer it while talking, then you don't need to. But let me just see. Okay, we have some questions. Kindly deliver the truck of plantains in my garage. Thank you. Of course, if you can do plantain futures. Right. So that's where we are. Okay. So super interesting with futures. Now, what does futures mean? Let's see what that looks like. Now, as I just showed you, we've got, personally, I focus on these four futures because I think it's easier for you to trade these. You are going to go away and you're going to learn other futures. As I said to you, there's copper, there's gold, there's corn, there's whatever you want, they're all available in the markets. They trade futures. They trade in what they think the future price would be. So you buy a margin ahead of that. Okay. So the focus with futures, because the futures market is super volatile, the movement is quite high, and you see why it's that. And I'll play maybe one recording so you can see how it jumps. Okay, it's super important for you to understand what it means, what it looks like. Now, in the futures market, it's similar to the options market. Now, if you guys know the S&P 500, if you want to trade S&P 500, you have two options, right? You can trade either SPX, which is the bigger version, right? It's more volatile, more volume, it's 10 times the size of SPY. The same thing is available in futures. You have two options. You have minis and you have micros, okay? Just like you have SPY. So, for example, if you look at the S&P 5, if you look at SPX, current XPX price is 7354.02, give or take. SPY's price is 728.99. So just about 100 times or 10 times bigger. Sorry, 10 times bigger. So 728, 73504, just about 10 times give or take. Okay, that's what it is with futures. In futures, you have minis and you have micros. Okay, so it's super important to bear this in mind. Now, at the beginning, what I always encourage everybody to do is to trade micros because one, it's cheaper, it allows you to track it, and you can build skills there and you get paid as well. Okay, now I want to just put this, I mean, everyone knows this, but I wanted to make sure anyone that's going to watch this recording later understands this, okay? First of all, futures have a lot of volatility. It moves really fast, okay? So a small market move can create large gains or loss. Beginners should practice a simulation first, and I'll show you how to do that because we can trade that on TradingView. And then you can trade micros before minis, okay? Because minis are the bigger version, and you will see why. Micros are the smaller one. So when you go on YouTube and someone's saying, I'm trading micros, or or I'm trading minis, they're explaining the differences. Obviously, it's always a good idea to trade the micro version before you go into the minis. Okay. Obviously, this class is not going to be perfect. Margin is not the same as maximum risk. Margin is different from the maximum risk. The maximum risk is if you hold that contract to the end, if you traded one lot, which is just one contract of, say, S&P 500 futures, and it cost $5,000 or $7,000, when that contract expires, they will call you to pay the full price, and then get delivered to you. If you go and trade crude oil futures, and you only currently pay, I don't know, $1 or whatever it is, $10, and then you hold it and it expires, right? They will ship a barrel to you. They will call you and say, well, you need to pay the full price and we need to ship it to you. So this is how it's super important to understand this in the background. That's why it says margin is not the same as maximum risk because you're trading with margin, but the main risk is if you hold the contract to the end. Now, because of the volatility of futures, you need to work with losses. Okay, and you need to have daily loss limits. If you hit a certain, I mean, you should be having this anyway. To say, okay, if I hit this level, I have to stop trading. Okay, because I need to obviously give myself to get away from the screen, give myself time to recover. Futures react faster on on news events. So that drop, huge drop, and it happens more often than futures. Okay, because it's super fast. And in the class, I want to make sure that obviously you understand the product. That's why I spent 15 minutes distinguishing between options and futures. Okay. We're going to talk about P&L, what that looks like. I've just mentioned micros and minis because I think it's super important to get that. As always, we have to trade with a plan. Okay. And we need to first use simulated accounts before we jump into the real accounts. Okay. Another reason why futures is becoming popular is because you can trade futures on prop firms. We'll talk about that at the end of the class. Okay. Now, I've already explained all of this. I wanted to make sure that so that when you're looking at this, if you're only looking at this deck, it's not too strange. Okay. Futures are the contrast that just tracks the underlying assets. So S&P 500 futures, which is ES, tracks the movement of the S&P 500, but it predicts where it's going to go and where it's going to come. Okay, that's why it's super fast. You can go long to benefit from rising prices. You can go short to benefit from falling prices. It's the same thing when you trade options, calls and puts. Calls are for longs, puts are for shorts. Short is if the price is coming down, so you sell and buy to cover, or long is price is going up, so you buy and sell to cover or to close. Okay. The exchange will decide this will define the contract size, the tick size, trading hours, expiration, and settlement rules. Okay, this is something you will pick up as you're going. Now, features are leverage. So your trading margin, but your P&L is based on the full contract exposure. So for example, if you're trading, I don't know, corn, and they say full lot of one corn contract is $10,000. You have to have $10,000 in your account to cover it. But when you open a position to trade, you might only open with $50 or $20 because you're opening a leverage. Okay. But then so you're trading with a margin, a proportional margin. So if they might say, okay, to open a contract to buy a futures contract for corn, you just need to use 2% of the total value of corn. So if corn is say $10,000, you open a position with $200. If it's $1,000, you open a position with $20. And that's you're opening a a mini position. Then you can get to micros, obviously it's 10x, right? So you can trade with that. Now, most of the active retail traders close or roll positions before expiry rather than hold it into settlement. So we talked about that before. It's a good idea to close that, or you trade the ones where it's rolling, right? It's rolling, right? Now, the beginner edge is not prediction. You don't need to predict it. You just need to know where the risk is sitting, okay, and where you need to close those positions. So that's how you trade. Okay. Now the core chain for futures trading is how price moves. Each movement becomes a tick, and this tick is converted to dollars. And I'll explain to you what a tick is. Okay. Now, when we look at, so let me cover this and I'll get into what ticks look like. Okay. So I mentioned to you before, the ES is the E-mini that is the features that is tracking the S&P 500. I like to trade it because it's balanced, there's a lot of liquid, it covers the broader market. The NQ is NASDAQ, is more volatile for people that trade. What is the SPX equivalent for? Hold on, I keep forgetting. I know it for NASDAQ. No, for QQQ. I think Mia trades this as well. What is it? What is it called? MPX? No. What is it? Anyway, sorry guys, it's taking me somewhere else. But yeah, so E-mini, Nasdaq, super volatile, right? As you can tell, that's with the same thing with all tech stocks. They're super volatile, moves faster, wider swings, super crazy. I don't touch it. Okay, the Russell 2000, I like it. It has decent risk appetite and it has breadth and rotation. And of course, gold futures, right? It has influence on macro situation, USD rates, inflation affects all this stuff. Okay, so there is the micro equivalent. So if you look at the ES, which is futures, the micro version is called MES. NASDAQ futures, the smaller version is called MNQ. Russell 2000 is M2K and gold is MGZ. So the M behind them pretty much stands for micro. Okay, because it's 1/10 the benchmark exposure. And you can see that as we go forward ahead. So I think for everyone joining this and looking to get into futures at the beginning, we need to trade micro. Because I need you to pick up the skill, can trade micro for a month. You still get the same amount of money, it's just 10 times cheaper. It's like trading SPY over SPS. Okay. Now, this is what it looks like. Okay, it's called tick size. Now, I'm going to explain this for you. So it's because this is where the main point is. Okay, this and these are the main points because that's how you make your money. Now, for the S&P 500, okay, which is futures, right? The S&P 500 futures, which is ES. Each move, so this is super important. So each move, each one point move, okay, each 1 point move, each one of them is $50. The value of it is $50. So what does that mean? Let's come here. Let's do a replay. Okay. So if we say we wanted to do a bar replay, no, start new replay. Say we want to do here, right? Let me do a little bit here. Okay. And then I press play. We reduce this so you can see, so you can follow it slowly. And I press play. Maybe that's too slow. Let's do 1x. Okay. As it's moving like this, every time the price reduces by 1 point. So if it goes from 7423.25, sorry, 7423 to 7422, that's 1 point move, right? So if it goes down 1 point, the cost of that point is $50. Okay, so if you took puts, for example, say if you went short, okay, you bought at say 7 when the price was I'm going to ignore the first point, the first number, focus on the other one so that way it's easier to sort of talk. So if it goes from 423 to 422, if you took short, you entered at 423, and it goes to 422, that's 1 point move, you make $50. Okay, now why does it show you a tick size? That's because futures moves in 0.25 lots. So for example, you're not going to see futures go from 423 to 423.11 or 423.15 or 423.17. It doesn't do that. It either goes 423.25 or 423.50 or 423.75 or 424. Do you guys understand that? It only moves in 0.25 lots. Okay? It moves in in decimal points, it only moves in 0.25. So what that means, it would need to move 4 ticks to cover a full point. Okay? I'm going to pause here. I'm going to repeat that again. Okay, maybe let me use Excel sheets so I can explain to you guys. Okay, so the price is 7423. Okay, .00. Make sure we're doing it correctly. Okay, 423.00. Okay, now futures moves in ticks. Okay? It moves in ticks. Sorry, wrong spelling. It moves in ticks. Each tick is 0.25. Okay? Each tick is 0.25. So think about it as 25% of each point. Okay? So my question to you guys now is, just so you can understand, don't overthink it because you're going to see it happen. If futures move from 7424 to 7424.00, okay? How many ticks has it moved? How many ticks has it moved? Now remember, one tick is 25%.
Four.
Exactly. Amazing. Thank you, guys. Thank you. Because it is gone. So if you do that times 4, it will give you 1 full point, right? So it's going to go from 0. It goes 423.025. It will go 50. Yeah. Let me take that down here. It will go 0.75, and then it will go for this. It will go this. That's how it moves. It doesn't. You're not going to see. You're not going to see 0.42. You're not going to see 7423.17 or 15 or 17 or 23 like you will see on SPY, right? You're not going to see that. Every time you look at futures is in 0.25. So you can see if I expand this, you will see the market close 7525, right? Russell 2000 does move in one point, but these two don't. They move in 0.25s. So even if we did this, leave, if we came here for NQ, yeah, if we came to NASDAQ and did a replay, if you keep an eye out on the time, on the price, you would see how it moves. But because it jumps so fast, you're only at behind the decimal points, you're either going to see 00 or 25 or 50 or 75. You are not going to see, let me slow down. You're not going to see 47 or 48. Just keep an eye. It's either 25, 50 or 75. So it moves in 40. So it moves in ticks. Each tick is 25. So that's how it moves. Okay? Now that you guys understand that, we're going to talk about what that looks like. Now, because each 1 point move, yeah, because 1 point move on futures, one point move is 50, right? Now, because one point move is 50, right? And then it moves in 4 ticks of 0.25 each, okay? How much would the value of 1 tick be? So what you need to do is equals 50 divided by 4, right? Because it moves in 4 points. So it's 12.25. Okay? So what that means is, this 12.25 you're seeing here. So what that means is, when you open a contract, say for example, as we wanted to trade here, let's go to futures, leave. Say, let me see if it will let me, because I want to show you something. I haven't tried this before. Let's see if it works. Okay, 1 minute ticket. We go on a replay, right? Let's go until, where should we go? Let's go here. Let's say here. Okay. And then we want to trade the return, right? So let's say, let's sell, right? So sell 1 unit for futures. We're going to buy at 7425. Okay. Sell limit. And then we click on play. Let's see. I think I've bought. It should show. No? Oh, hold on. See, already my P&L is jumping up. So as SPY is so that was super fast because you can see the money there. That was crazy fast. Okay, and then I'm just going to buy to cover a position. Sold. Okay, we can do it again. So what happens is when you look at when you buy, once you buy a contract, say you buy puts, okay? If say you bought puts at seven, let's say you bought puts at 724, 424.75, you click on buy. If it goes down from 75 to 50, your contract would increase by $12. It goes down to 50. So the easiest way to think about it is if you bought a contract here at 72, let's say you bought here at 726. Sorry, what am I saying? 726, 426, and then you sold here at 39. Let's say you sold at 340. So you sold at 400. Okay, you bought at 426, so that 400. Okay, so that's 26 points difference. Yeah. So what your profits would be equals 26. It'd be like this. 26 times 12.5. Yeah, times 4, 1,300. So essentially, each tick, if the contract is going in your favor, each tick, you make $12. Sorry, I think I've gone to the wrong one. Each tick, you make $12. And then, sorry, I think I'm on the wrong stuff. There we go. Each tick, you make $12. If it goes in your favor, you make $12. If it goes down, you lose money. You lose $12. Now, you can see that the most of them are about the same points. So it moves in 0.25. So S&P 500 and NASDAQ moves at 0.2. So it moves 4 ticks for each point, because each move at 0.25, which is 25% of each point, you make $12.50. Why? Because $12.50 times 4 is $50. So if you bought at 74.20, if you bought puts at 74.20, and it came back all the way down to 7,400, right? That's a 20 points move. So it'll be 20 points times, right? 4, because it'll be 20 points times 4 times 12.5. So that's how you make profit. Now, because micros is 10 times smaller than minis, that's why each point is $5. So if you bought a micro, each tick move will make you $1.25. Meanwhile, if you buy minis, each tick move will make you $12.50. Either make you or lose you, so depending on the position you've taken. The same thing applies to NASDAQ. NASDAQ, each points move is $20, but it's more volatile. So that means each tick move, because it's 4, so 20 divided by 4 is 5. So every time it moves 1 tick, if it moves 0.25, you make $5 either way. Okay? The mini version, obviously, it's 10 times less. Russell 2000, each tick move, it moves in tens, right? So which means each tick move is 5. Smaller version is 50 cents. Gold, super huge, right? Each tick value is $10. Right? Which is $1 in minutes. So that's how he moves. Now, I'm glad you guys caught what the tick is, because that's the first thing to understand, right? So inside every 1 point move, there are 4 ticks. That's because each one move is divided by 4, which is 25, 25, 25, 25 in 4 places, which is represented by 0.25, 5.0, 0.25, 0.50, 0.75, and then 0.00, whatever it is. So that's what it does. Okay. Now, this is an example. So if you bought a contract, S&P 5, you bought a few ES, okay, you're risking to 2.5 points, which is obviously you get 10 ticks. If you bought the normal ES, if it moves, you get $125. Because it's 10 ticks, right? So if price goes from 7,400 to 7,425, you're going to get, obviously that's 4 ticks. So that's 10 ticks at 2.5 points. That's the calculation there. So it's pretty easy to understand. I can show you as an example here. So let's do this recording again, and I'll make it super slow. Record, uh, start new one. Let's keep it here, here. And then what I'm going to do is I'm going to reduce the move so everyone can follow. So let's say price is going up, and I want to trade. I want to buy at 7.4. So I want to sell at 7.4. What did we do? 20. Okay, I want to buy 1 unit. So I've placed an order, a limit order. So once price hits 7.420.25, it will fill my order. I hope it's filled it because it should fill. Hold on. Yeah, so it's filled it. Okay, so now price is still high. You see, as price is coming down, because I feel that 720 is coming down, is 100, right? 23. So I'm at loss because I bought puts, or I shorted at 20. So that's how you'll be reading, because I put shorts. Okay, I'm down 375, and then boom, right? It's now dropped. That drop I'm now in profit, right? Because I shorted, as you guys can see, I shorted. Let me move this away. So, okay. So I've shorted, as you can see. I'm still in profit. I'm 1,000. Then I can sell. I can close the position. I can just do a buy, and it's closed. I made 950. Okay. That's what it is. We can do another trade. Let's see. Leave. I'll replace that new. Let's do when market opened, right? Trade. So market is open. We can come and say, okay, let's buy calls, right? You can go buy. Let's buy one. I'm buying at 7,372. So it's loaded. So now I bought. Okay. I'm probably going to be on a loss. Oh, I'm already up P&L because I bought when price dropped. Okay. So as price continues to go up, I'll be in profit. I'm trading the normal micros now, right? Not the minis. Okay. So that's the price because I bought at this bottom. This is where I bought once price hit here. So it's jumped up. We can fast forward it a bit faster, right? You see price. As price continues to go up, see how it's jumping. So I've just bought. I can sell whenever. I can come here and say, okay, fine. I'm going to sell. I can set sell order there. Can I sell? I don't know how to set if there's anyway, I think I can do trade. Sell at 7,460. 7,460. So I've set a sell order there. If price goes back to clear here, it will close my order. I don't remember I think we went back up, didn't we? Yeah, I think we did later in the day. Oh, I don't remember. Maybe we did it. But anyway, you can see my profit is down to 2K. I think we went back up, if I'm not mistaken. Let's see. Maybe we didn't.
It didn't go all the way up.
Okay, yeah, it didn't go all the way up. So market would, yep. So I'll close. I can close the trade. Right. So when the market closes, it would close your position. Right? When the market closes, it will close your position because end of the day it would close it, which is what I like. Some platforms will just close it for you. Right? So this is how you trade futures. Now we can trade micro futures, which is MES, right? This one. And you can see,
Sorry. Hello, Charles. Sorry to cut you short.
yeah,
Yeah, what feature are you using now to trade as if it's live but on a
yeah,
replay?
yeah, yeah. Yeah, it's trading view.
Okay, so even though it's a replay, you can still
Yes.
like buy and sell.
Yes, you can trade. Yes, you can buy and sell on is it but it's simulated, right? It's not real, right? Yeah.
Okay.
Yeah. Let's try for micro for let's do minis. Okay. And then I'll maybe let's see if we can buy a trade. Where is it? Buy when price comes down here, buy. I'll put my stop loss here, take profits here, and then boom, and then buy, and then play. Let's see. If price comes down there, if you fill that order. I think we did. Yep, it's filled the order, right? So currently at a loss. But you see, it's not in hundreds or 200s. You see, it's cheaper. Can you see? So when we were trading normal trade, by the time we got here, it was 2,000, 3,000, 4,000. But obviously, it's 10 times less because we're trading micro minutes, right? MES, right? So that's what it is. We can close the position. Yeah, it's closed it for us. So what did we make? $303. Okay, so the micro version is 10x smaller than the mini. When we traded the normal one, I think at this point we're up 3,000, 4,000. So that's what it is. So this is how you trade futures, right? It's normal buy and sell when the market is trading. Okay. So going back to our deck, this is the calculation. When you trade the smaller version, you get 10 times less. When you trade the bigger version, you got the normal amount. Same thing with NASDAQ. Okay. And same thing with the Russell 2000 and with gold. Okay. Now, the this is just the calculation, which is what we've explained to you, right? We find an entry position, we can set buy or sell at a level. And then as it moves, right, each point move contains 4 ticks because each move is 0.25. So 0.25 times 4 is 1. Okay. Which is 25% times 4 was 100. Obviously, that moves each tick move, depending on the index depending on the futures you're trading, will tell you how much you make. Each tick move to either side will tell you how much you make or how much you lose, right? So these are examples, right? So if you bought at 450 and sold at 452, right? 450 to 452 is 2 points move, but each point contains 4 ticks. So 4 times 2 is 8. So 2.8. If you each point move is $12.50, right? Times 8 is 100 is 100. So that 2-point move from 450 to 452 can make you $100. Obviously, in MES, it will make you $10. MNQ loser, give an example for losses. If you entered at 19,200 and sold at 19,190, which is 10 points down, right? Which is 40 ticks because right? It's got four, sorry, because remember, it's got four four ticks in each point. So it will be 4 times 10 is 40 ticks, right? So you lose $60 in this move. Obviously, if it's the smaller version, you lose $6. Same thing with gold. Okay. Um, the class rule. So this is I wanted to put this so everyone can remember. Use the tick size, the tick count, the dollar tick value before we enter any trade. So you need to tell yourself, if I take this, if it goes up 5 points or 10 points, I make this amount, I make this amount. Okay? You need to tell yourself $12.50 for every move in minutes. $1.25 for every move in minute. $12.50 every move in micros, $1.25 in minutes. So for most of you, I want you to trade minutes because you're able to keep an eye on it. You're able to focus on the move. You enter, you set your stop loss. You set your take profit. When price gets there, it closes for you. Okay? That's how you trade futures. Super important. As you start to trade paper trading, you can paper trade on TradingView, as I showed you guys. If you're trading on a computer, if you just go on the top right, you can see trade. You just click on it. You can come and pick paper trading. Okay? Once you click it, you click connect, it will connect you. You all connect. You can practice on replay. So for example, we know that market jumped up. Let me go back to normal futures. Okay. So what I could do, let me click here. What I could do is I can draw a line here. Let's say here. So 360 was the low of day. Okay. So that's 360 there. I can say trade, buy. Let's buy at three. So move this buy down here. Yeah. And then I'll move my stop loss a bit below. So 360 to 3, let's say my stop loss is 350. So 10 points move. I'm willing to risk around, because this is 20, I'm going to reduce. I'm not buying 20. I'm going to just buy, what's the volume? I'm not buying 20. I'm just going to buy, and then I'll put my sell limit here. I'll take profit there. I'll just put it here. So let me I to split it. Sorry. Let's do it again. Trade. Buy. I'll put my stop loss here. Move my buy down here. Take profit around here. All right. And then I can do a replay. Start new. To start from here. And then play. Let's keep an eye here. Let's see when he buys it. If we load our order. Oh, he didn't load the order. Sorry. I don't think that worked. All right, I'll do it again. Okay, maybe I need to do it before. So I have to do replay before. Okay, start new. So do it from here. And then trade. Let's see. Buy here. Stop loss is here. And then take profits here. And then buy. Okay. Place an order. And then play. You can see what is happening, right? How the market is trading. and then boom. So I can sell. I made 650 or whatever it is, right? So this is how so you can practice. You can practice a live session when the market opens. You can practice the neck on, you can practice when market opens. And so, okay, market is ready. So I want to buy. You buy, you click on buy or set your levels, limit orders. You can set limit orders there, right? So you buy limit orders, buy or sell, and then trade it and practice. I would say use MES because it's cheaper. Now, I know why I'm saying use MES because how do you trade? So where do you get money to trade? We'll talk about that in a minute. Okay. So you will start with micros. Okay. When you're learning, right, you want to make sure that you're trading with micros because it's the move is the price on there is something that you can relate with. I don't want you guys to see a tick move and then it goes into 1,500 and your heart is skipping. So you trade this, right? You have clearer understanding of what it is. You put a stop size because you feel emotionally uncomfortable if you trade with mini because it is huge. And also because your learning is important for you to use micros, okay? NQ and gold, the moves feel very fast. It jumps around a lot. So I would recommend if you want, you can start trading either Russell 2000 or S&P 500 futures. The goal here is for you to understand how you trade, pick up the skills and acquisition, okay? When you become better, then you can move there. And obviously to trade here, you need to set your stop loss before you buy. So you need to set the levels there and then you buy because it's super important to have that, okay? Allows you to execute without chasing or widening stop loss, okay? And it gives you, capital efficiency. This is when you're actually better. But when you want to trade, by the time you move to mini, you want to be able to get consistent capacity for execution. So you start with 1 micros. When you're confident, you can move to 2 micros, you can move to 3 micros, and then move to 5 micros. Think of micros like contracts. You buy 1 contract, or you buy 2 contracts, or you buy 3 contracts, or you buy 5 contracts. Okay. When you've been doing that for a while and you'll be more confident, then you can start to trade mini. Okay. Now, remember when I said to you guys, margin is not your maximum risk. That's because if you hold it to the end, okay, you would actually have to pay it. So when you're thinking about this trading, I want you to think about um uh, what it looks like if you were using real money trading. Because if you lose that, that's gone. So that's why I want you guys to start with minis, because in minis, you are able to manage the risk properly. Okay, you're able to focus on the risk. Now, because we're not using that, we're not going to, I mean, most of us are probably not going to be using our own money. It's still also important for you to focus on risk. I've told you guys the 3 big skills you need for trading is risk management, understand market structure and price action. Okay, and then of course trader psychology. So you build your psychology through experience. Okay. Small moves matter because it's particularly with micro with minis, it reduces the heart that your nervousness by 10 times. Okay, so it's 10x smaller. Now, this is how you look at your day when you're trading futures. Okay, in the pre-market, people say this a lot when we're trading. They will say Asia session, yeah, is accumulation. Okay. And then they will say London is manipulation, okay? And then New York is distribution, right? This is something that people talk about a lot within trading, right? In the morning, you will see a lot of this. If you're trading that session, is always like this. London session, you get a lot of drawdowns to the downside a lot. And then, of course, when New York opens, you get a lot of distribution. So price shoots to the upside. Generally, that's what people talk about. If you look at the price action, right? If you look at the price action for the minis, it seems to want to ring through. So look at Friday. This is Friday, right? Market open in Asia. Look at that, right? Market opens, you had that a lot of that jumping. Then London came, to the downside, and then New York to the upside, obviously rallied back down. Okay? People talk about this a lot, right? Distribution can be either up or down, but typically people feel like Asian session is super accumulative, right? London sessions, you get a lot of push to the downside and then New York upside. Okay. So you need to bear this in mind when you're trading these sessions. You see a lot of a lot of responses. Again, the same thing here, right? So accumulation, manipulation, and then distribution, right? So one of the lessons I've learned is I try to, unless market is moving like crazy during um, Asia and London session, I don't want to trade New York session because the volume is there. You get clearer moves. That's something we're familiar with. Most times when I've traded New York, sorry, I've traded Asia and London sessions, I don't really make really good
No,
money.
sorry, Charles. Did you say I don't want to or I just want to
What you
trade the New York session? Did you say
I prefer to trade New York session. I prefer to trade New York session.
okay, okay.
Personally, I
Okay.
prefer to trade New York session because I think there's more volume. There are more clearer moves. It's not too thin, particularly with the kind of June we've had. It's super terrible. So I would like to mostly just trade New York session, but we can practice with those other sessions. So in the morning when you wake up, you don't have to wait till 2:30. You can come on Trading View, click on trade there, right? Log in, right? You can once you click on trade, it will say pick one. Just pick paper trading, right? Connect, and then you can once you connect paper trading, click on connect. You will get buy and sell thing here, right? So when prices, you just click on buy, you would buy. It will tell you how much do you want, how many do you want to buy, or whatever. This unit is one. How do you change the units? Maybe because market is closed. You can set, you can do, okay, I want it to move 75 ticks, so I want you to, whatever. You can do all of those. You can set your levels and trade. Okay. Practice. You can practice for the whole of next week, going into July, right? So it's super important to bear this in mind. So in the morning, when you wake up, you can plan the market, look at market structure. It's okay. This is the high area. This is the low area where price has been hitting all day. Let me set my levels and see if we can test it, blah, 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 blah. Right. And then when market opens, we know that market moves really fast when it opens. That's why I don't like to trade the first 10, 15 minutes. We want to get some structure. Okay, because sometimes when you get in there, because of the movement of the market, it puts you at risk. In the afternoon, it's super slower, right? You don't need to jump in trades. In the evenings, market might be closing, so you have that big move. For example, we saw this insane move when market was closing, right? Price just did something wild towards close of market. Look at that dump to the downside, and this happened within 30 seconds. This move, see, 359, you had that big move to the downside. And then 4 o'clock, that downside, and then suddenly jumps to the upside here. That's ridiculous. So, but typically what I like to do, I would like us to catch the moves in the morning. That's why when we have our live session, we tend to look at the first big move of the day, right? This is what happened on Friday. We were watching here. You can see it better on SPY. If I go to SPY and show you, right? We're watching that level, right? We're watching price here, waiting for price to break low, previous day low. But I was answering the question and then it broke. I think some people took it, but then we waited for the second opportunity when we broke 730.90, had a retest and then broke. And then we rode it all the way to pre-market high. And then it consolidated a lot and then it just tested previous day close. And then we were waiting for some opportunity to trade puts, but it was just holding this line and then we ended a call. Obviously, we saw the move to the upside and then broke all the way back down before close. So you get all of these, right? All of these happens in the market. So what I want you guys to do is as we go into next week, you can consider start testing your skills around futures. Okay. Why is it important to trade futures? Because we're going to talk about, as we move forward, we're going to talk about prop firms and what to do to give you a chance to trade this. Okay. Now, I wanted to put this in, just give you an idea. Uh, ES allows you to look at what market it looks like from a structure perspective. Again, when I always say understanding market structure is a skill you need. Okay, so futures give you market structure. If you guys remember yesterday, before we traded, I told you guys that I did draw 4-hour time frames. I don't know if you guys were on the call yesterday. So I'd woken up, I'd seen what price was doing, right? In the lead up to market. I could see the market structure. I was like, okay, cool. So it looks like we have, if you look back window all the way to 5th of June, we can see these areas where key levels where price could trade. So I set this and this, right? So got a demand zone, and then I had the supply zone. Demand zone was where low of day was sitting eventually, and then obviously supply zone was around previous day close with opportunity to test high of day. When you go down to the 15 minutes, it's a little bit more clearer. You can see price was just testing that level. Broke there, came bounced here, went up, that's it. So if you're able to understand market structure and price action, you can go, okay, I can set my key levels then, right? It looks like price has not been able to break here. So when price dips in here again, I'll just buy calls. If it breaks, then I can buy puts. Price didn't break, okay? It came down. So if you miss this chance here as you're looking, you can say, okay, I'll use previous day low as my entry level. If price breaks previous day low, I would buy, regardless of, which is the same thing we were trading, when market on Friday, right? We're watching for price to break previous day low because when market opened, it was just trading below. It was trading in this area. When we had the first break and rally to the upside, obviously, if you look at SPY, we had that same level there. It was literally just sitting there. We're waiting for price was just hogging this line. So we had our trading plan to say puts below pre-market low, calls above previous day low. Obviously, this is what we got. So you can trade this as well in futures. It's exactly the same thing. You buy and sell. Okay, that's it. What I want you guys to do is, as we start on Monday, if you're interested in trading this, you can consider trading futures. Okay, you can start with minis. Okay, MES is the ticker name to trade it. Okay, MES. So for the futures, you just put M at the beginning. Then you're trading the mini version. This is the micros, which is the bigger version. I like ES because you get cleaner structure. It's useful for learning to understand levels, and it gives you a better market balance structure. Obviously, other ones are important depending on your risk appetite, but I think it's super important for us to start with ES. Okay. What you need to do is look at market structure. So context, the market structure. What does it look like? Are we trending down or trending up or trending in range? Okay. Do we have important news for the day? So as you can tell, admin always posts market snapshots. In market snapshots, you can read about what's coming up. You can read about if they have economic news on that day. Right? You can look at that and say, okay, what do we have today? So for example, sorry, I moved that there. So going into next week, right? On Monday, we have Chicago PMI. Okay. Then we have job openings at 10 o'clock, and then we have consumer confidence. So 3 key datas, right, on Monday. Okay, so you can see the data comes out between 9:45 and 10 o'clock. So these 15 minutes are going to be super important at market open. So 9:45, 10 o'clock is going to be super important. On Tuesday, we have employment data from ADP. The new Fed chairman is going to be speaking at 9:30 in the morning. So market is probably going to open super hot. Manufacturing data is coming out at 10 o'clock. Okay. Then on Thursday, we've got unemployment reports, jobs reports, right? The whole of Thursday got jobless claims, right? And then Friday is July 4th. Market is closed on Friday. It's the US national holidays. So we've got short trading day next week. So you look at yourself and go, okay, if I'm going to trade, probably better to wait until 10 o'clock to get clearer direction. On Wednesday, sorry, on Monday, apologies guys, on Monday, no data. So it's going to be led mostly by price action in the market. All of this data is on Tuesday. Wednesday, we have that. Wednesday, we have this. Thursday, we've got that. And then Friday, the market is closed. The week after, we have ISM services data, trade balance, wholesale, jobless claims on Thursday, and Friday no data. Okay, so you need to be looking at this data information because we look at it from here, right? This is where it gets reported. This Econo Day, because it's the free version, you can only look at the data on the day. So this was last week that we traded. Obviously, you can see all of this. We're waiting for this data at 10 o'clock, consumer sentiment data at 10 before we took the trade. So if you notice, 9:45, 10 o'clock is when we broke. So we had 9:57 and then 10 o'clock data, which is where it was testing here. Once it came out, we had this big candle, entry candle, and then boom to the upside. This is where we traded. Some people entered here when they caught it. I didn't catch here because I was explaining. I had a question from one of the members explaining obviously the moves and key levels in IWM, which was again similar. We had these key levels. So I wrote this key level break. So for those that were trading IWM, once we got this after 10 o'clock, we entered this rally to the upside. Okay, so this is super important when you're trading. You need to know what data is coming out, what times, so that when you're sitting and looking at the charts, you can understand what's influencing the moves and the direction. This is what this is talking about. Okay, news day, risk on or risk off. Levels, this is something you already know. You need to mark your levels. So whether you're trading futures or options, whatever you're trading, you need to have your levels. Okay, previous day high, previous day low, previous day close. One difference is on futures, you don't have pre-market high and pre-market low because the market is already open during what would be counted as pre-market in normal SPY and QQQ and IWM. So you just have pre-market high, pre-market low, and previous day high, previous day low, previous day close, and then high of day and low of day. And then you look at where prices are bouncing, and then you can trade those levels. And then you can tell yourself, okay, what confirms entry, pullback or hold? So pullback hold is when price comes back and then stays in that area. The next breakout, you take it. Breakout retest is obvious. We all know what retest is, right? So when price comes in, the trade we took on SPY, which is also available on futures, I'll just show you here. This is what retest is. Okay, price touches the level, comes back down, touches, comes back down. These are all retests. This is the first candle that would have been ideal, this candle. Now, if you didn't take that, the next level to take would have been this. So this is a breakout. This is a retest. This is a major breakout. This candle, which is not touching the level, is what you take. It will be the same thing when you're trading futures. I trade the same strategy. I don't trade anything different. So here, there you go. This would have been breakout, enter this candle, or to enter this level, I wait for, this is breakout, this is retest, this is breakout, confirmation candle, the one that is opening above the level, you enter, and then rally to the next price target, and then you exit. I mean, from 7401 to 416 is about 17 points, right? Times 4 times 12.5 or 1.25, depending on what you're trading. That's what you get as profit. So super important to understand how this moves, okay? Because this is how you're going to trade it. Obviously, when is the idea wrong? Because you're never going to get 100% trading a day. There are some days where you're going to make like losses are part and parcel of trading. When is the idea wrong? The simple way we manage risk is if price returns and breaks your key level, okay? If price breaks your key level, you are out of that trade, okay? Say you go, okay, I want to trade, calls above PDC. Price comes, break, this candle breaks, this candle is touching that, and then you have that's still touching, and then this continues, okay? If you didn't take a profit here, and then you held your contract, and then price came down here, once you see this candle, it is now open below here, you have to exit the trade. Now, it does look like it came back, but you don't know this, because this is where this is the information you have. So once it breaks here, you go, okay, price has invalidated my move, and then I'm out of the trade. Typically, what I would always recommend is once you're in a trade, once you have this big push to the upside, you take profit anyway. If you want to hold because you want a bigger move, you can hold, but then you risk this break to the downside. Okay? It did rally again back up, but again, you didn't know this, right? So what you can do is say to yourself, because we've had this first big move, I like to wait because you can see when we had that big move, then we had consolidation. If we entered here, which is why I told the team that we shouldn't be trading here because it was just consolidating, super choppy. And then the next big move to the upside. Now, typically, high of day would have been here, right? It would have been at this level. So when price goes, comes up, comes up, comes up, touch there, have a retest, breakout, retest again, and then continue. So this is how price moves. So you need to know what invalidates your idea. And then execution, you only enter if the reward to risk and dollar risk makes sense. Because trading is all about probabilities. So you look at the trade and go, given current market structure and price action and available key levels, where is the opportunity to trade that offers us the highest probability outcome? Because all you're doing is you're making a decision and hoping that given where the market is at the moment, it's going to favor your choice. You will be wrong. There are going to be instances where you were wrong because losses are inevitable. Okay? Now, because you're starting, the first trick is to trade with minis. Second is to use this simple setup and framework. Super easy to use, okay? These are things you think about every day anyway, in some form or shape. These are things we talk about when we were in our live classes anyway. We use this as well, okay? You need to set daily maximum loss. How much are you willing to lose per day? So if you're trading minis and each tick move is $1.25, how much are you willing to lose that day? Are you willing to lose $10 or 50 or 30? That's your maximum. If you hit it, you need to stop trading for the day. Okay? You need to have your stop loss. I've mentioned it over and over again. You need to trade your the micros until you become really good and you can move obviously to the minis. Keep each loss small enough to stay emotionally neutral. Avoid high impact releases until you understand speed and slippage. Like you need to be checking this is important. You need to journal your trades. It's super important to journal your trades, okay, because that helps you build better process. Okay. You want to make sure that you're actually becoming better. The goal is to become better. Trading is simple, but it's not easy. Okay. So it's always important for you to make sure that as you're trading, you're taking in all of this risk. You're taking in all of this risk control checklists. Okay. This is your beginner framework for obviously futures. This is the risk. I'm going to share this in the community so that obviously everyone can look at it. Now, you can have this template. You can use this template to trade. I think it's super important. Okay. What you do is you fill this out. As you start with it, you fill it out and go, okay, sorry, once you finish your trade, or before you take your trade, you fill one side and go, okay, I want to trade MES today. That is trending to the upside because of this news. I need to set my levels. I'm watching a break above previous day close or previous day low or high of day or low of day, or previous day high. Okay. Entry price, once it breaks above that level, I take it. This is my stop loss. Okay. This is where I want to take profit. Okay. I want to take profit at this level. You need to know where you're taking profit. Just to stick in the trade and hoping that it would get $1,000. No, you need to know where you exit. You know the stops in terms of your tick size, right? You know how much you're going to lose or you're going to win, right? I mean, you now know how to calculate it, okay? You're going to see how much your reward is. Risk to reward will tell you, right? So if you're buying at 410, I want to sell at 415, and then your stop loss is at 47, then you're risking, obviously that's what is that, 3 to 5? No, sorry. 1 to 1.45 or thereabout. Okay. So you calculate your risk to result. You have your maximum daily loss. If you take your first trade and it's a loss, you have to review and say, okay, this is how much I've got left. If I lose this, I have to stop trading. You need to always journal. Okay. You always have to journal. Okay. I'm going to send this to you so you guys can have this at hand so you can use this because futures is rewarding, but it's like a next level trading. Unlike options, where, yes, it's contingent on price action. Futures is super contingent on price action because you're trading what the chart is telling you. Okay. I was going to run this exercise for you guys. Okay. So that I know you've already answered through the conversation, but I want to hear you guys. Okay. We'll talk about it. Now, say you bought two MES, okay, minis, and price, you bought two lots, contracts, and then price rose 3 points. What is your profit?
15.
So
15.
if I write it down, we'll look through the results. So I want you guys to write it down. So you bought two MES, okay? So MES is the smaller version of ES, right? So that means if ES is if one tick is $12.50, because MES is 10 times smaller, how much would be one tick move? Now, how many tick makes 1 point? Okay, so what you're going to do, you're going to do the total number of ticks that makes 1 point times 3 times 2 times 1.25. You short NQ. Okay, you short NQ. So you took short, so you bought puts. And then price, from where you bought it, price rose 8 points against you. What is your loss? You bought 3 mini gold, and then gold goes up like $4.20. What is the profit? You bought one Russell 2000. The stop is 2.3 points away. What's the risk? How much are you risking? So how many tick are in 1 point? So remember, points is dollar moves, yeah? And then you bought 4 mini NQs. Your stop loss is 15 points away. What is the risk? I can show you guys, but I want you to write it first. I'll show you the answers, but I want you to write, because I want you guys to understand what we're doing here. Okay. So use there's a formula at the top there. Okay. I've put the formula there. So the number of ticks that he moved, the tick value, and then the contracts that you multiply. So if price rises 3 points, how many ticks are in that 3 points? Remember, each point has 4 ticks for MES. What is the value? What is the tick value? We know that each value, right? So ES value, right? You know what it is? And then what is, it's 50. So what is MES then? And then what is the profit? Have you guys answered? Have you got your answers written? All right, I'm keeping an eye on time. Now we only got 15 minutes, so let me go that way. So this is the answer. So question number 1, you bought two you bought 2 minis, ES minis. Sorry, micros. What am I talking about? Micros, minutes. Minutes. And then you moved 3 points. What's the profit? So 3 times 4 is 12. Yeah. And someone was saying 15. Now, 3 times 4 is 12. Remember, you moved 3 points. Yeah. But you bought 2. So 3 times.
Yeah, I forgot it too.
Yeah, I know. That's
It
where it is.
too.
Yeah, that's why you're saying 15. Yeah. Exactly. Yeah.
Yeah.
Yeah. So 3 times 4 is 12. So you move 12 ticks. Okay, that's 12. Now remember, MES is 10 times smaller than ES. So it's instead of 12.5, it's 1.25. That multiply by 2 contracts you bought or 2 lots or whatever it's called. That's 30. So you bought puts, if you want to use that term, but you short NQ, but price went against you by 8 points. What's the loss? So 8 times 4 is 32, right? 32 ticks. Each NQ is $5. So you lose 160. Gold, the third question is you bought MGC. You bought, so you didn't short it, so you were looking for call, and then it rose $4.20. What is the profit? Because gold moves 10 ticks, so you can see 42. So you got each move has 10 ticks. Okay, each point has 10 ticks, which means gold is moving 1 for 1, right? But 10, 1 for 10. No, yeah, 1 for 1, but 10. So you make 123. Russell 2000 moves the same, 10. So remember this page. Let's see, go back here. There, this one. Tells you what the moves are. Each $1 move is $100. So which means each one tick. So if he moves one tick, yeah, so gold would move 4,010, 4,020, 4,030, 4,040. So it moves in 10 points. That's where you get that. Russell 2000 shows the same thing. Okay. Where are we? I think we're there. MNQ, 15 points. Question. You bought 4 MNQ. Sorry, actually, let's do Russell 2000. You bought 1 Russell 2000. The stop is 2.3 points away. What is it? So remember, for Russell 2000, each move is, so it's, yeah, sorry. Okay. Yeah, it's fine. Okay, so each, the 2.3 points move, yeah, is 23 ticks. So each point has 10 ticks inside. So he moves, so he counts 10 ticks. So he will move 1, 1.1, 1.2, 1.3, 1.9, and 11, or 1.9 and 2, then 2.1, 2.2, 2.3, 2.4, 2.5, 2.6, 2.7, 2.8, 2.9, 3, and then that's how he does. So you calculate his 10 points. So gold and Russell 2000 moves, he's got 10 ticks per point. Futures, NQ and ES moves 4 ticks. Okay, so how many did you guys get? How many did you get? Honest answer. It's okay if you didn't get all of them, but how many did you get when you were calculating these questions? How many did you think you got? Silence.
I only attempted one and I got it.
Oh, well done. Well done. Good. Okay. I want you to practice this. I want you to think about it. It's super important in the mind. ES has 4 ticks. ES and NQ has 4 ticks. Okay. Gold and Russell 2000 has 10 ticks per point. Okay. 4 ticks per point and 10 ticks per point. That's all you need to know. Right? Now, I wanted to put this as super important just so you can have an idea of what you're doing. Okay. It's super important for you to convert using contrast size and tick size. Okay. I think it's important for you to start with one contract, which is called lots or whatever they're calling it. Okay. Depending on what you're trading. If you trade ES, you buy 1 lot, you know that inside one lot, 1 point move, you're going to get 4 ticks. Each tick is 25% or 0.25. Okay? If you buy gold, 1 point, you have 10 ticks. Each move, right, is, each, it's a 1 point, you have 100 ticks. Each decimal point move is 10 ticks. So that's how you have to think about it. Okay? It's important to understand because I don't want you guys to double click and then price runs crazy. You think you're buying options contract, you're trading futures. Okay? The risk profile is a bit faster. So you need to start lower. That's why the minis exist. Okay? You can't move your stop. If you hit your stop, let the trade close. Okay? There's always going to be another trade opportunity. Okay? You cannot ignore the news. You need to know what's happening because on news day, price moves. You can't oversize. Start small. Some people oversize because they see all the money. It used to happen to me. In fact, sometimes it does, and I beat myself about it. Can't over leverage. Can't oversize. Okay? You can't trade all the market at once. They move differently. They really do move differently. I would say if you're used to trading SPY, trade ES or MES in this case. If you're used to trading IWM, trade Russell 2000 RTY. If you're used to trading QQQ, trade MNQ. If you're used to trading GLD, then trade GC or MGC. Okay? You have to journal. You have to write your journals and say, okay, I messed up here. I need to improve here. I took a trade at this time. I was looking at this time. Price target was this. This is how I was feeling. You need to make sure you're capturing so you can remember. It's the only way you can improve. Okay? Give yourself a 30-day roadmap. Okay? You can say, okay, all of July, I want to get familiar with trading futures. Okay? Understand the contracts, or they call lots. Understand how many ticks are, for whatever you're trading, understand how many ticks are inside 1 point move in that lot you're trading. Okay? Memorize the table, complete 25 P&L calculations. Okay, so if you move this, if it moves 1 point, 4 ticks times 1.25, I get this. If it goes down this, minus, times this, times 1.25, I lose this. If it moves 10 points, you can do that. Play with the numbers so you know what you'll be looking for when your eyes are on the screen. Okay? Week 2, want to start execution. You can trade 20 trades on micro contracts. I keep saying mini, sorry guys. So micro are the smaller one, minis are the main one. Okay? You trade micro contracts. In week 3, you're going to be reviewing them, journaling, making sure you're capturing, looking at the areas where you're struggling, look at the areas you need to improve. Week 4, at the end of July, we'll try and admin will probably put another time on the calendar for us to review our performances and see where we are. So that when we're going into August, which is historically a trend moving month, September trend moving month, October trend, remember last year, market was moving, second half of the year. So we need to be ready so we can take advantage of it. Okay? Know the products, understand the symbol, the underlying, the point value, the tick size, and the tick value. Use micros for the first time until you're better. Then you can go into minis. Risk is stop distance, tick value, and number of contracts. Do not live trade capital. None of you are going to live trade capitals until you become better. Okay? Protect capital first, build skill second, size up last. This is what trading should be, your steps. When you've captured your key skills, which is understanding market structure and price action, then moving to risk management, then understanding trader psychology. You need to know yourself. You need to know, you can be saying to yourself, oh, this is what I did last week that I lost money. I'm feeling the same way now. I'm about to try that rubbish that I did last time. You need to talk to yourself. In your mind, you should be telling yourself and say, oh, I'm feeling like I want to click. This is the mess I did last time and I messed up. Even if one part of your brain will be saying, just do it, this time around you're going to be lucky. You say to yourself, no, that's not my trading pattern or trading habit. I need to look at how I trade slowly. If you do, look, the truth is with trading, right? So every one of us on this call wants to be alive in 2027. We want to see New Year's Day 2027. Whether you train and improve your skills now or not, 2027 is going to come anyway. What you can do is you can practice and say to yourself, by 2027, I have skills to make more money. When you were in uni, you didn't, no one planned to just start making money in your first year. You didn't say to yourself, now that I'm studying this engineering, I need to start earning money today. You're saying to yourself, by the time I graduate and finish my master's, I want to get a better paying job. So we know how to plan for the future when we're acquiring skills that is common to us. For example, degrees. It's the same mindset you need when you're trading. You need to think about it as a skill that is going to source you for life. When you go online, you are hearing people talking about it. Trading took me 5 years. It took me 4 years. It took me 8 years. It took me this year. You can't skip that level. So you need to put the time in and then understand it, right? And then get to where you want to get to. Okay? Now, I wanted to briefly talk about prop firms before we close. This is something we'll talk about better. Prop firms are pretty simple. They are businesses that provide you money to trade once you pass their requirements. The common requirements you need to pass is evaluation. They're going to evaluate how you trade. So you buy an account, and then you go through the evaluation process. Once you pass, then they fund your account. They give you money to start trading with certain parameters as well. And then when you hit those parameters, you get paid. The profit you make, they split it 50-50. And then eventually, once you become really good, then you can start using, or you can start trading. Maybe they say, okay, if you become a really good trader, instead of splitting 50-50, we can split maybe 70-30 or 90-10. You go home with majority of the money because you've proven yourself. That's what it is. Examples of prop firms. This is what I use a lot. Stop Step. Okay. With Top Step, you can trade. You can go funded trading, prop firm. Okay. Start trading. You can open an account. Okay. It's called a started trading combine. What they do is you have different accounts. You can get there you go. What is this? These are people that have become really good, right? The 100 performance bonus, 100 grand level, but this is the simplest rule. Hold on, where is it? Start with a trading combine. Yep. See here, you buy. So if you wanted to buy, let's go to standard. If you wanted to buy a 50K trading account, so I kind of gets you to 50K to trade, you pay $49. Okay. Now the target to pass is you need to make they've added new stuff here. You need to, they've added all this shit. It's crazy. Off. Okay, let me put this off. I need all those. Okay. To pass this account so that they can give you the main account to trade, you need to pay $49. Then trade, you make 3,000 in profits. Then in that 3,000, you can't make it in one day. So the maximum you can make per day is 50% of this. So maximum profit per day is 50%. So which means you need a minimum of 2 days to pass this test. You can't make more than 50% of this total profit. So if you open the account on Monday and then you trade on Monday, you made profit. Your profit must not exceed 50% of your target. So your profit cannot exceed 1,500. So you can make 1.5 today, and then tomorrow you make 1.5 you've passed. Or you make 1K today, 1K the next day, and 1K the day after. Whatever you want to do, but you have to pass it in a minimum of 2 days. Once you've passed it, then you have to pay for your funded account, which is $150. You will get this account, you get the 50K to trade, right? And then when you've made $150 for 5 days, it doesn't have to be consecutive, then you can request for a payout of up to 50% of the money. So you buy this account. By the way, if you don't pass it in a month, obviously it would automatically charge you. So typically what I do is when I want to trade it, I'll buy it. I'll start to trade, and normally I will pass it in a few days anyway. But you can cancel the subscription, but you still have that 1 month to trade. You pass in 1 month. Now, it's not just making profit. You have to make sure that you do not lose 2,000, up to 2,000. Your maximum loss limit, the maximum amount you can lose in this qualification is 2,000. If you lose up to 2,000, the account is gone. You have to restart another account. You have to pay another $50 to restart. Okay? And they tell you what you can buy. You can either buy 5 minutes. So the maximum you can buy the maximum you can click to buy is 5. You can't buy more than 5 at a time in mini, or 50 micro, because I think as we now know, micros are 10 times smaller than minis. So when you want to buy, you click buy, 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 buy. You cannot click more than 5 at a time. So it means like you cannot buy more than 5 contracts at a time if you have this account. If you have this, you can't buy more than 10. If you have this, you can't buy more than 15. Okay? This is what it is. And then once you earn a payout, this is what you need to do. Once you've passed this, you pay 150, they give you what is called a funded account. When you go, it will say funded account. Then you start to trade. These are the rules that you have to trade to make money. Okay? Have at least 5 $150 winning this. So you can make a minimum of $150 $150 every day for around 5 days, then you'll qualify for a payout. Okay? That payout, you can request a payout for up to $2,000 per one instance, right? So say you've traded 150, 150, 300, 500, and your account is, I guess your account is $10,000 or $5,000. The maximum you can withdraw at any time is $2,000. Okay? In addition to making that money, you have to trade at least 3 times a day. You have to trade at least 3 days with at least 1 trade per day. So for you to be qualified to withdraw money, you can't come and for example, you can't trade 1 day, make 5,000, and then you're done. No, you have to trade. I mean, it's five trading days anyway. So you hit 5 days. Maintain your account balance between payouts. So ideally, you want to make sure that there's still money when you request the payout. Typically, I like to request payouts when I used to get this account. I like to request payouts when I've made 3,000. I'll request 1,000 because I'll still have 2,000 there as my money to buffer any unwarranted losses. Unless I want to close the account, and I'll request for all the payment, then it'll close the account. Okay, so this is how it is. This is how you trade. There's also another one called Alpha Profit. This is the one is I think it's the Alpha. Yeah, it's quite popular. You can get Alpha futures. You can get smaller. How it works. Oh, is this it? Yeah. Sorry, I think I passed it. It's a bit more. This is a bit more expensive. 50K is $79, so this is quite expensive. There's the one where you pay. What is it called? I have to find a name. I'll show you guys. I think it's called. Anyway, I'll find. It's cheaper. Let me look at my phone. It's like $25 for 25K account. So you can trade that one. $25 for 25K accounts. What is hold on, let me find it. I only stick, I don't have it to mind because I only Apex traders. There we go, Apex. They're actually doing a promotion at the moment. What is that? 80%? Oh, size eval. So save now. So you can buy, here you go, right? So 25 25K account size, right? You pay $19.99. So it's $20 at the moment. Okay. 50K is $24.99. So it's $25. 100K is $39. 150K is $6. Obviously, you can see the price, the differences in what you need to do. So if you're going to buy 25K account, then you need to hit 1,500 profit. You can't lose more than 1K. The drawdown is intraday. So they calculated it as you're trading. It's not end of day. End of day, the price changes, as you can see, the price jumps up, right? But they're trading as, so if you're trading every day, as you're trading, and then you hit 1K in losses, the account will close. Okay, so this is also the next one you can use. You guys can see my screen, yes?
Yes, we can.
Yes.
Yes, amazing. Eval active for 30 days, will expire for 30 days, no resets. What is that? Okay, you buy performance? Hold on. No repeal. Blah, 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 blah. Why is it? What's five? Oh, you buy 5 accounts. 5 accounts for 245. Or 1 account. These guys are just throwing accounts at people. That's crazy. Anyway, so you can, so this is a step one, pick product, choose draw, blah, 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 rule. Once you pass it, this is what you can trade. You can trade ES, obviously. It's the same thing that I was telling you guys. Each tick size is 0.25. You can trade the Chinese market as well. You can trade, say, you can trade all of this, mini Dow, mini mid cap. There are different futures market you can trade. You can trade metal, so gold, look at them here. Copper, silver, platinum. You can trade energy, right? Crude oil. You can trade agriculture. There you go. You can trade cattle. You can trade corn, wheat, soybeans. You can trade currency. Obviously, this is one was really popular in Nigeria. You can see the tick size, 0.005 or whatever it is, right? So if this is crazy because if it moves 1 point, so if it moves from 50 to 100, it's like 100 grand in value. This is ridiculous. Equities, of course, is what we normally trade. So we can use, there are different prop firms. It's super cheap, but there's also a risk because it's so cheap. When people just blow accounts, they just buy accounts whenever they want. They blow, they buy, they blow, they buy. That is risky. You want to make sure that you're trading with discipline. This is why you're going to start small. This is why you need to paper trade first using TradingView. Okay, so this is why I want you guys to first focus on that. Okay, prop firm it doesn't more or less equal free money. You pay for it. They do not remove risk. They do not remove capital. They have that requirement. Mute yourself, guys. Mute yourself. Mute yourself, so you can say. Okay. I put some of them here, and I wanted to put, so Alpha Futures, Top Step, 25. These two don't work in Nigeria, Alpha and Top Step. You can get Apex, which is what we just looked at, right? Apex works in Nigeria. 25 works in Nigeria as well. Right. So unfortunately, these ones you can't. I wanted to put this out so you guys can get that, they can get a better understanding. Okay. Now, this is what I want you guys to take away. Okay. You need to know the product, calculate it, what it looks like. Start with micros, protect your capital. Prop firms are rules based. Okay. Super important. If you start, you need to make sure you're playing with the rules. Now, I know some people are in the community. I think just a reminder, I wanted to put this because I was asked to get this in here. If you wanted to join our trading community, this is a subscription base, okay? This is still running. So make sure you join so we can trade together and make money. We can make money. You've shown yourself that you can make money, okay? I don't want you guys to underestimate the ability to be profitable in the market. I've talked about this a lot of time, right? Trading is not about making thousands. For some people, trading is it's about making an extra $200 a month. Because in that way, what you do is, okay, that 200 will cover your, I don't know, your car insurance or that's money you're putting aside every month. And the year is 2 grand. You can then buy your ticket to travel and go see family in Nigeria. Right? Some of them is just making 500 a month. Okay? Because by doing that, then you're able to say, okay, I'll save 6 grand a year because my kid is going to go to school next year. So I can save 6 grand this year and then add as tuition fees. So I can move my sister or my brother from to go and study in Hungary or Austria or whatever it is. Okay. So this is why it's important. Any questions?
Yes, I have a question, please. Two, actually. The first one is, so why do futures traders, why are they liquidated when you have sharp moves in prices? Because you said they have like 1 month, 1 to 3 months time in the market, right? So why is it that sharp moves cause them to get liquidated?
Yeah, because the market can stay wrong longer than you can stay liquid. You need to have money to trade it, right? You need to have money in your account to trade it. So futures, remember when we're looking at this, it requires, let me show you. So you need money because you're trading with margins, right?
Yeah.
Yeah. So say you have 5K in your account and the value uh of uh sorry. So you've got 5K in your account and the value of ES is $50 per point move. Yeah?
Mm-hmm.
How many moves would futures need to move for you to lose your 5? So say, for example, let me show you here, it's easier. So each tick is 500, right? It's 50, right? Say you have 5K in your account as your traded money. Okay?
Yeah.
Futures then move. So look at this calculation. So just look at this, for example. 423 all the way to 370. How many points move is that? We can do the maths. Yeah. So 423. No, 7423 minus 7370. Sorry, just do the maths here. Do the maths. 53 points move. Okay. So you can
Yeah.
do, yeah. So 53 points move equals that, right? Times 50. That's 2,650 already. So if you were thinking of calls, but then price came down, you've already lost 2,650. You're already down 2,600. That's a huge loss, right? Because
Yeah.
each cruise is 50. So it's super important. Yeah, so it's super expensive. If you were doing minis, sorry, micros, right? Then it's 265. So you get liquidated because you run out of money in your account. That's it.
So are they taking it live? So my question really is, how does it differ? So if you don't, let's go to options. If you don't sell your contract, yes, you might be in profit. You might be in loss, but it's unrealized loss, right? Because you haven't sold it or exercised your rights, right?
Yeah, but your contract can get to zero. So if you bought a contract at $100 for calls, but then price was going down and your contract value is going from 100 to 98, 97, 95, 94, 93, 92, 40, 20, 30, it can go to zero. So you can lose that money, right?
Okay.
Yeah, you can lose it. For futures, the losses are huge. Okay, so if you have $5,000 in your account and then you took a mini and then and then price jumps all, because I don't know if you've seen before, futures does swing crazy. So in a day, futures can move 100 points. So see, for example, see where high of day is. Yeah,
Yeah.
459.5. Look at where low of day is. 357. So what that means is 459 point. What is it? 459.1? Why am I getting terrible with numbers? Okay, minus 357.25. Okay. So futures swung 102 points in one day when touched here and touched there. Imagine you were at any point here. So let's say you took puts here because you think price was going to come down. You took puts here and then price bounces back up. It ran from here to there 102 points. Okay. So if you've taken puts, but you didn't close your contracts, right? And then it allow it to run up, that money is gone. 5,125. It will liquidate, it will close. So you don't have money in your account, you lose the money. So for options contracts, you only lose the value of the contract you bought. If you bought $100 contract, if the contract goes to zero, you only lose $100. Futures, if you enter, you don't have a stop loss, your account could go to zero. That's why people get liquidated. So when you're trading prop firms put those risks in place to say you can't lose more than, you can't lose more than $2,000 or you can't lose more than this amount, right? Super important to do that because otherwise you're going to blow your account. Okay? So when you're buying, yeah. So here, look, maximum stop loss is $1,000. Okay, as say you took one trade, you took one mini, you took calls, but then you took long, or price came down, you lose 50. This will say you only got 950 left to trade to lose, and then you lose another 100. But if you're going up and you're making money, then you need to hit 1,500. So because if you don't, you literally can lose everything, right? You can lose everything. So it's super important to have stop losses in place because the market can go further down. It can shoot down all the way down, right? All the way down. You can hit here, it can come down to 740, or you can take puts and then price shoots up, and whatever amount in your account would get liquidated because trade price is going against you. So these things are important. That's why when you want to trade, when you click on trade, right? When you click on trade, it's super important to do this. So you can see you buy. Sorry, I think it's open two positions. Let me close one of them. Say trade, right? So close that. Say trade. Okay. So want to buy here, you have to have a stop loss here. Let's say you have stop loss. This says 20. I don't want 20, but let's say I don't know why it's telling me 20. I don't want 20. Okay, I want 1. That's it. Okay, you put your stop loss and say if price breaks below previous day low, close the contract. You're willing to risk $662 and then take profit is here if it touches previous day close. So, and then you say buy. So what you're saying is when price gets to this level, 7,399, buy calls for me, and then it will buy, and then take profit when it gets to previous day close, which is 1,150. But if it goes against me, I'm willing to lose 662 or whatever it is. You can move it to the top because price moves super fast in futures. Okay. That's why it's important for you to trade micros because micros move quite small. Okay, so if I say I wanted to buy here, stop loss is here. I'm willing to risk maybe say, I don't know, $50 to take profit at $100. But So stop loss. So if price goes back up from here, when market opens, right? If price jumps back up, touch it, it will buy for me. And then if it goes up, it will close profit there. If it comes down, it will. So I'm risking $50 to make $100. So that's 2-to-1 profit, right? Because if I don't have a stop loss and price continues to go down, I'll just keep losing money. The losses are you just keep coming down. Boom, 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 boom. Price, you will lose your money. Okay? So that's why it's super important to have stop losses. Right?
Please, I have a question.
Oh,
You you said that they give you like targets to meet. So what happens if maybe you don't get to that target? Does it mean that all the work you put in is gone?
so it's either you hit this target or you hit this target. If you're still trading, yeah, and
Yeah,
so you've got, look, it's got a what's it called? You've got you've got a target to hit 1,500, and
that's weekly or is that
no,
monthly?
just keep trading. For 30 days, active for 30 days. You see, this is
Okay.
30 days. So within 30 days, you need to hit 1,500 while not losing your loss cannot exceed $1,000. Okay. So
Yeah.
yeah, because losses are part of the trade. So if you buy this contract, if you buy this evaluation, which is $20, you pay $20, you have an account. Your target for that account is trade and make 1,500. But make sure you don't lose. You cannot make a loss of more than 1,000.
Okay.
That's the requirement. When you pass it,
So if you don't get up to 1,500, then you've not met the requirement and you won't get what
yes, you don't
they
have
said
30,
you'll
yes,
get.
within 30 days. Yes, you have 30 days to make your
What if
video.
you exceed it? Is that a problem?
No, once you hit it, that's the account will say congratulations, you've passed. Then you move to what is called funded account. So this is a test. This is the test. This is evaluation. This is the test. Let's say there's a
For
video.
the funded account as well, because sometimes I see you say target met, your daily target has been met
Yeah, I
or
have my
something
test.
like that.
Yeah. I have my
Is that personal target or the
yes, that's
target
my
is set to you?
that's my personal target. I like to set personal target. I don't want to overtrade.
Okay, not like they are telling you, oh Charles, you have to do this. If not,
No, the only thing that they don't. So for top step, remember when we were looking at top step, right? Top step say
yeah,
that um you need to remember what top step was telling us. First of all, you need to pass the evaluation, right? So theirs are more expensive. 50K account is $50. Once you've passed it, the target is the profit goal. You must reach, this is the profit target you must reach to pass the test. Okay? Are you seeing the screen?
yes, yes, I am.
So for you to get a funded account on Top Step, so each prop firm has their own rules. Top Step says if you want to trade and we can share the profit, we can give you money to trade. Okay? Now,
Yes,
for us to give you the money to trade, you have to pass a test, right? It's called evaluation, right? It's called a test.
right, right,
Yes. So for you to be part of the test, you have to pay this amount. You pay $50, they give you the accounts. You register to take the test. Then in the test, your requirement in that test for this account size is a trade and make $3,000 within with you have to make $3,000. The minimum trade days you have to have is 2 days. So that means the maximum profit you can make in one day is 1,500. Okay, you cannot exceed 1,500 every day because they want to see how you can be consistent. So, because people come to trade, just one day they just make 3 grand. They go, I've passed. No, they go, you're going to trade at least 2 days. You pass it. Now, while you're trading, you can't lose more than 2,000. If you lose 2,000, you failed. If you want to try again, you have to pay another $50. Now,
okay,
once you pass the test, once you passed it, right? Once you've passed it, then the next step is congratulations, you've passed the test. We're
Yes,
going to
yeah.
give you a funded account, a 50K, you have 50K in that account. Inside that 50K, you have the same rule. Any money you make here, we are going to share it. Okay?
Yeah.
For us to share that money, you have to make a minimum of 150 a day. Okay? That's what it means, and a payout. So here, congratulations. So when you pass this test, when you make 3K, so first day you trade, you make 200. Another day you make 150. Another day you make 75. Another day you make 300. You make 500. You make 700. Once you hit 3K, the account will go, congratulations, you've passed. It will just stop, automatically stop and say, congrats, you've passed your evaluation. It's called Combine. Then they will say, click on this link to activate your funded account, okay? Which is now $150 you pay. Once you pay it out, then you have what is called a funded account. It will change from evaluation account to funded. So you have 50K to trade with. In that 50K, you have some rules, okay? The rule is for you to get paid for whatever money you make, whatever profit you make, you need to have at least 5 days where you made a minimum profit of 150. So if you trade 5 days and make 150 each day minimum, you have 750. In that 750, you can then request payout. No, yeah, you can request payout of, I don't know, 50% of it, which is 325 or whatever it is. Okay. So that's how it works. Yeah. You go through evaluation, you pass the evaluation.
Now you have the funded. Now, sorry to cut you short. I don't want to forget what I want to ask you. Now you now have the funded. If, for example, they tell you you have to make, like here they said, have at least 550 winning trading days. If what you got was 100, you still made money. It's
Yeah,
just that
but
it's not up
you
to
can't request.
150.
Yeah, but you
What
can't request for
happens?
payout. Yes, you made money, but
Okay,
you.
but the money is still there.
Oh
It's
yes,
not that, oh,
it's they
it
all
sets to
yeah.
zero.
You can make 50, 50, 50 for 100 days. Okay. Yeah, you can make 50,
Okay,
50, 50,
okay.
50. They're still there, but you can't request for payout. Because to request for payout, you have to have 5 days where you have made at least $150. So you don't lose the money. You don't lose the money, still in your account. If you're making $100 for 10 days, that's 1K. The 1K is there. Another 100, and is 2K. Another 100 is 3K. Okay? It's just there, staying in your account.
Yeah.
Nothing is happening. But then once you hit 150, then 100, then 150, then 100, and once you get to once you've had 5 days of making 150, let's do it like this. Let's say it like this. Okay. So you got days, yeah. So you got day one, day two, so day two, right? Uh, okay. Let's say day 10. Okay. And then so this is the trading days. Okay. And then profits. This is post, you've passed the test, right? So here you made
Right.
100. Okay, you made 100. They made 100. They made 100. They made 100. They made 125. Then you made 140. They made 100. They made 50. Okay, they made 30. They made 25. Okay, this is your trading days, right? So once you're done, what's it called? Yeah. So once you finish there, this is your total sum. Okay. You have 870 account. It will show you 870, but because they're less than 150, yeah.
Can't withdraw.
Yeah, you can't say, can I withdraw? Yeah, you can't. Okay.
Okay. So they
So
have to see 150, 155 times before they can say, okay,
yeah,
withdraw the
yeah,
maximum amount. So you can even, you may have built your account to 100K, but you can't even touch it because it's
yes,
not 150, 150. Okay.
yes,
So you have to do that 150, 150 to get the maximum withdrawal. Then
yes,
before you can come tomorrow and say, okay, I want another one,
exactly. So let's
must
say
have showed.
yes. Then let's say
Okay.
let's say day 11, day 12, right?
Yeah.
And then,
After I withdraw, I resets. You now have to start counting another 150, 150, 150 for you again.
yes, another 5, exactly. And then say today you did 100, and today you did 155, then today you did 170, 100, 180, right? 10,
Yes.
200, right? 15, and then you did 150, 150, 200, and then you did 80, and then you did 55, and then you did 300. Okay?
Yes.
Right. So this happens, sorry, I'll do that there. Right? This happens 149. No, I'll change that. I think I've done that. Greater than 149. Go green. 149.99. So you got these days. 1, 2, 3, 4, 5. Here can request for payouts. Okay?
Yes. Okay.
Yeah, here. Because you have 5 days now, right? So you go 1,
Yes.
2, 3, 4, and then 5. Okay? Request for payout here. Now,
Yes.
request for payout here, what the amount would be, it would be, yeah, it would be these amounts.
Both the big and the small.
No, yeah, so it will just be everything. So if you have the sum here, it'll be everything. So this is one we put it, yeah? It'll be all of this, yeah? And then this is how much you're gonna withdraw. So it will be equals this one that you made before plus this one, yeah? So you have
Okay.
2,750. But Top Step only allow you to withdraw up to 50% of your balance. So this is your balance. So you're gonna withdraw 50% of,
Yes.
right? You can
Okay.
also withdraw 1,350. Yeah.
Oh, okay.
Then,
Yes.
yeah, so you can withdraw this one. Then you have a balance of this in the account. Now, what I like to do personally is I don't like to ask for withdrawal until I've gotten up to 3,000 in the account. Yeah. Then I can ask for withdrawal for 1,000
Yeah.
because I still want 2,000 to be in the account as my balance so that I can take more trades. Do you understand? Yeah. So that's how it works.
The 2,000 there is not your, but you're splitting the money. The 3,000, is it your money or the total money?
What do you mean?
No, you said if you have like 3,000, you want to withdraw only 1,000 and
Yeah,
then
then
leave
I have
2,000
2,000.
there.
I
I'm
still want to
saying
be
the
able to trade.
3,000, is it the total money?
Yes, total money. Yeah.
Oh, when you've passed the evaluation, you're trading with the money you've made. So they are giving you money to trade with.
So this does not. So once you pass evaluation, you have a new account called funded account. You have 50K in that account. These restrictions still apply. These restrictions still apply. These ones. These. This one. You can't lose more than 2K. So even when you have a funded account, even when you have this funded account, yeah, when you're trading,
Yes.
you can't lose more than 2K. If you lose more than 2K, that trading account is closed. You have to go back and
Okay,
start,
so
again by paying another
oh,
49 to pass. Then when you pass, then you come and pay 150 to get the account again.
so what if you had built up the account to maybe 4K and you've not collected any money? Then you go and lose 2K,
No,
up more than 2K.
once you build your account. So okay, this is the interesting part. That's a good question. So when you start the trade, yeah, when you start to trade,
Yeah.
um, you have 2K, right? You can't lose more than 2,000. Okay.
Yes.
And then you build the account from 2K to 4,000, right? You build the account from 2K to 4,000. What they were doing before, I think what they were doing before is once you build it to 4,000 and then you say you don't touch any money, if you then start to lose, obviously you start to lose money, you go down to 3,000, go down to 2,500, um, it goes down to, so that's 25,000. And then it goes down to, actually, let me just do 1,500, and then you lose 1,500 here as well. You've already lost 3 grand. This will go down to 1,000.
But they'll start with your money.
But what do you mean your
They'll
money?
start with the money you made. They'll start with
Yeah.
the money you have made.
Yes, that's what the deduction is. So if it goes up, you make money. If it goes down, I'm trying to understand when you're asking, starting with the money you've made. The money you've made is in the account, it's still there. When you open your trade, you will see if you made 500 yesterday and you come back today, you see 500 profit. Your account will go from 50K to 50,500. Then you make another 500 the next day, you go to 51,000. And then you go 51,500 and go 52,000. And you go, but you can't lose 2 grand. So if you start from your first day to trade on that funded account, and then you lost 1,000 that day, your account is now 49,000, right?
Yes, yes. But if I've been doing so well, and my account is now 55,000,
Yes.
the
Yeah.
rule of not losing more than 2K still exists. But remember, I have 5,000 there
No, yes, no,
of my
then
money.
yes, good question. So what has happened is if you're there, then if you can't lose down to 5,000, so you can't lose this 5,000 you've made. Yeah. So at the beginning, you have a buffer of 2 grand. So as long as your account does not go back to zero, let me show you. Let's read it. Let's read it together. Okay. Funded account trading rules. Because each ouch. Okay. So maximum loss limit, your account balance must stay above the maximum threshold in positive territory. Okay. So this is what it looks like. Let's see where it is. This is funded account parameters, right? So here, this is what it looks like. So this is the started account. So once you start to trade, if you get 5 days of $150 plus, they pay you your what's it called? They pay you your you can request for payouts, right? You can
Right.
get a maximum of 50. I think this is an older one, but you can only get 50% of your balance. Okay, up to 2K. That's
Yes.
5K, but this is up to 2K. That's what it's saying. You can withdraw
Yes.
any payouts, 2K. It's those that have 150K, they can request up to 5K. But you that have this, you can withdraw. So if you trade and you build it to 5K, the maximum you can get, even though half of 5K is 2K5, the maximum you can get is 2K. You have to then trade another 5 days to request for the balance. Okay, so that's what it is. Okay, then
Yes.
yeah,
Yes.
then there's maximum stop loss limits. Okay, where is it?
Yes.
Yeah. So do not hit your maximum loss limit. 2K. Now, if you've grown, I think they passed a new law. So this is the beginning. You can start at 50K trade income. My balance is 50K. Maximum loss limit is 48K. But in express funded accounts, your ML starts at minus 2 grand and trails upwards. Once your balances reaches 2,000, the ML locks at 0 permanently. From that point on, your balance can never fall below 0. Does that make sense? So what that means is if you make, as this is a good question. So what that means is if you make 5,000, yeah, essentially your
Yeah.
your stop loss moves from minus 2,000 to just 0. So that means your account now is 55,000. Yeah. If you then withdraw
Yes.
2,000 or whatever it is, then your account is going to be 52,500. So you can't come back, you can't lose that balance of 2,500. Okay. But if you're there and then you grow the account to another 10,000 and then you withdraw, let me do it here, and then you grow from there, you grow equals that times, you go to 10,000 and then you request for
Mhm.
withdrawal of 2,000, right? Your balance
Yes.
will be 2,000. Your balance will be 8,000. You can't lose more than 8,000. Okay. So once you go past there and it locks in, it's always a good idea to continue to trade to grow the account. And then you can't come back down. So if you grow up to 5,000, you will show 55,000, but your profit will be showing 5. It will be showing 5K, But as you lose money, it will be coming down, come to 4K, come to 3K, come to 2K, come to 1K, and then lose. Because remember, before you get there, you have a 2K buffer. So even though you had 50K to trade with, right?
Yes.
You can lose up to 48K, right? So you can do like, right? So
So
that's,
that when you make money, that buffer goes.
yes.
When you
When
start
you
making money, they
up
take
to
off the
2,000,
buffer.
yes,
It's
yes.
now you're now the buffer. Your
Yes, you
money
are
is
now the
now the
buffer. So
buffer.
you can't lose, your account cannot be flat. That's what it means here. So here, example,
Oh,
you start 50K at zero, you start today at 50K, then you have 1K balance. And then they've written this. Okay, so you start at 50K balance. First day,
yeah.
yeah, you make 1K. Your account goes to 51. Day 2, you make another 1K. Yeah, your balance goes
Yes.
2K. That locks at 0. So you have 2K now buffer profit. You can't lose that 2K. If you lose the 2K, it goes to 0, then you're out. But before then, remember you start in at 40, you have up to 4, you have 2K to lose. So if you go 51K to the
Mm,
2K, 53K, if you go to 52K, 53K, it locks at 0. Even though your profit is still showing as 3 grand, your profit is 53K, you can't then lose back down to 50K. So once it hits 0, any amount you make, it just continues. You make 4K, 55K, 56K. So you make 5K, 6K, 7K, 8K, 10K, the account has gone to 60 grand. You can't lose all the way back, because remember before it was going to be 48K. So if you
yes.
had 50K and then you made 10K, right?
Yes. It now locks at that 50K. So
Yes,
it's like they've protected their money. It's now your money,
exactly. So if you get to 60K, you can't lose 10K now. Because before you can lose 12K, right? Because you had your 10K you've made, right?
yes.
Yeah,
Yes.
plus the 2K buffer they gave you before. But they removed that
Mm-hmm.
2K because you've
Yes.
yeah, and then it's stuck there. Because instead of, if you get to 60K, then your maximum loss limit is 10K instead of
10K.
12K, because they've removed that 12K they gave you before.
That's okay. Okay.
Sorry, is everyone
Okay. I
following?
get it.
Everybody follow that conversation?
Yes.
Good, good, good. So say when you start for 50K, your maximum loss limit is at minus 2K and trails upwards. So for example, if the first day you made 1K profit, right? Your maximum loss limit will move from 48 to 49 because it's going to add that 1K. Then it goes to you go to 52K. And day 2 you made another 1K, which means you've made 2K. That means your balance, you can't lose that 2K. If you go to 3K, you can't lose that 3K. So they're protecting their own money essentially. But when you start, right? Yeah. Now, after your first payout, say you made 5K and then you decide to, or let's say you made 2K and then you decide to withdraw 1K of that 2K. Yeah. Your M
Yeah.
does not go back down to 48 to 49K. It's still locked there at 50K. Do you understand? So here, say you have 50K, and then the first trading day, you made 1K, yeah? Plus 1,000. Second day, you made another 1K, okay? 52 grand. Okay, now that's your balance. And then you go to yourself, okay, I'm going to withdraw, um, I'm going to withdraw 50% of my money there, right? 51K. You only have 1K as your threshold. Your MLL is stuck at 50K. So because you've withdrawn 1K of this 2K, your balance, so it doesn't go back to 49, right? It doesn't go back from 50 to say it's 49K, that is your balance, because you withdraw 1K, it goes down. No, it stays at 50K. So you only have 1K buffer to trade with. So typically, what I like to do when I trade 50K accounts, I like to make up to 3 grand, then I can withdraw 1K, because then I still have 2K buffer. Then I try to trade again. Sometimes I trade up to 5K, then I withdraw maybe 1K or 2K. So I still have my money there as buffer to trade, because I think 1K is too close, because I trade ES. I think 1K is too close. I like to have a 2K buffer, so it allows me to trade a bit better with my risk. Okay, so that's what it is. Currently, I'm trying to get a pass-in for a 150K account because you get 4,500 as your MLL, so you can trade a bit better. But obviously, it costs more. It's $150 to pay for that account. So that's how it looks like. I hope I was able to answer the question. Somebody else raised their hand up because we've only got 15 minutes. 15 minutes.
Yes, thank you.
Yeah,
Hi,
yes,
Charles,
that's
please. I have a quick question. I just want to ask, aside from the pre-market key level, are we using the same indicators for options as for futures?
Yes.
Thank you.
Yes. I use this, I mean, I trade the same strategy. I don't change it, right? So when I'm trading futures, I just use the same strategy. I don't want to risk anything. I just like, okay, what do I do? Okay. I'm waiting. It's just that this month has been super annoying, but you can see easily here because this previous day low was there marked already, right? So when market opened, I was waiting. I was like, okay, well, if we have a break above previous day, I'll go long, and then my price target would be here. But I think I missed this entry. The entry we got was this entry on 7401.5, this one, which is what most people took when they were trading SPY anyway. Because they traded, because yesterday was a live trading. How many of you were on the call yesterday?
I was,
Good. Do you remember this trade that we took?
yes.
Yeah, exactly. So we're watching here, which is exactly the same thing what we were watching on futures, right? So SPY, we're waiting. So okay, want to see price break here for us to take that trade. So that's what I was waiting for, essentially. Let me just hide this so you can see what I was doing. Yeah. So opportunity was here. I traded on futures. I think you guys traded options. I think I posted I think I made like 300 quid. Actually exited the trade too earlier. We should have held it to retouch. I think I said that here. If we had pushed here, it would have been 500 quid, but that's fine, right? So previous day low was the same thing. We're watching the same thing, right? So here, low of day was pre-market low, actually a bit lower because obviously this low of day was hit earlier before the market opened. So it was hit here, which was 23:36 UK time. But obviously 10 o'clock was when pre-market opened for these guys. But it's the same. Once market open, it's the same level pretty much. So we're waiting to take here. So I use the same strategy. I don't change it. The same levels I'm watching is what I'm watching. This is where we missed. We missed this opportunity because I was responding to a question about IWM, but then we took this one. So I took this one to here and I exited. I think people in trading options took from here to there and they exited. And then we were watching to see if it would go and test previous day high, which it did at some point, which was around here, and then bounced and then exited again. So yes, to answer your question, I use the same strategy.
All right, thank you.
Sure. All right.
Please, what about the
I have
times
a
when
quick.
you mirror accounts? Like you said, the profit you get is times
Yes.
a
So,
certain number.
so
How
look
does that
here,
work?
you can buy 5 accounts and then merge them. So once you buy 5 accounts, you can then use, once you bought the account, so you can buy more than one. You want to get accounts, you can buy. So this one, you can buy, select, yeah, you purchase it, you log in, you buy again, buy 5. When you're done, you can merge the accounts. So when you're on the trading platform, when you have it, yeah, it will tell you to merge. There's an option to merge account, and then you can merge it. It will tell you to merge the account, and then you can merge it.
When you're merging it, are you not just multiplying your risk? Is it not better
No,
to
you're
have
not
different
multiplying. You're not
accounts?
multiplying your risk. You're trading the same thing. There's no risk multiplication there. You're just trading the same thing. I don't know if it's gonna work. This is one of my older accounts.
You're trading the same thing across 5 accounts.
Yes, that's what. So copy.
Yes.
Yes, so you can click on here, main account, and then select boom boom, and then
Because if you're losing, you're also going to be losing across
yes,
What's the
board.
benefit of it?
you get paid. You get paid across them when you hit the targets. When you pass them,
When you lose across
yes,
accounts.
That's what I'm saying.
yeah. So you click on here. It says here copy trading. Any trade placed in the lead account will automatically be copied to the selected following accounts and will be traded with the same contract size. So once
Oh, and you don't have to enter each account. Like you don't have to go to this account, buy, go to the next account, buy. Once you do, it's automatically on all 5
absolutely,
accounts.
yeah. So once I click on save changes, or enable trade copier, you can see And now here, lead account. Yeah.
Mm-hmm.
I take trade here, it would apply on the other one.
Oh, okay.
If I make $100 here, it will show $100 on the other one. If I make 200, it will show. If I make a loss, it will show on the other one as well. Same thing, no difference.
Okay.
Yeah?
Wanted to ask, so when you're applying for this prop firms and you have, after you've gotten like you've passed the evaluation and they've given you 50K funded account, are you to use, is there a minimum or is there a maximum amount that you can use to trade? You have 50K account, can you use 20K to trade or 10K to trade, or there's a
No,
minimum?
you trade lot sizes, okay? Lot sizes. For 50K account, the maximum lot you can get is 2. Doesn't it what it says? Yeah. 50K account, maximum, when you're passing the test, you get 5. I think this is a trap. Personally, I think this is when you pass when you pass it, the maximum amount you can take is 2. So for example, this account that I'm trading is a 150K account, yeah? I can take maximum of 15 contracts. Can you see 15 on the side? So if I want to buy, I can buy 15 contracts. I can click on 15. I don't like to trade. I mean, this is crazy. The risk is too broad, okay? So you can trade 15 up to 15. But when you pass the 50K account, the maximum number of contracts you can take at a time is 2. But when you're
Okay.
but when you're in the evaluation period, they say that you can take up to 5. I think is a risk. You shouldn't take out of. I think you should trade. First of all, you should trade with micros. When you're really good, when you want to pass this, you can trade with 1. Because if you think about it, if you want to make, either say ask you to make 300,000, you can make 150 a day for 20 days, or you can make 300 a day for 10 days. And you can get that by just trading 1 micro, because it moves really fast. When you start trading, you're going to understand how fast futures move, okay? Because if they're saying 300 a day, 12.5, okay? 24 equals that divided by 4. You need price to just move 6 points to make $300. So it needs to move from 4, you just need to move from 4.3, whatever it is at the moment. What did price close at, right? 3,941, move from 401 to 406, and then you're good. And it jumps really fast. I mean, look at how big a candle is in 1 minute. On even the time goes 401
for the weeks, yeah.
8, right? It moves like flipping 3 points. Then 3 times 4 is 12. 12, it moves up, 12 ticks, right? If you're doing it, times 12, that's $144, right? In 1 candle, right? So the idea is to trade small. This is when you're trading, this is
Micro.
yes, when you're trading micros, if you're trading mini, you can make, slowly and build it. But this is where you're going to get to. Again, remember, I don't want anyone to think they're going to pass this tomorrow. Evaluation is very hard. Trading is simple, but it's not easy, because you're going to see a whole difference. Most of you are becoming familiar with options. So you can go, I'll buy 1 month, I'll wait for it to come back. It's different here. You have this loss. You can hit this easily without being careful. And then you end up $50 is gone. Another one, $50 is gone. I mean, or maybe you start with this one because it's cheaper, because it's $20. Okay, Apex Trader funding. You gotta be careful. Here, you need to make 1,500 in profit. Minimum day.
Wait, just sorry to interrupt. We have 30 days to make this 3K, right? Like in
Yes.
the
No,
evaluation stage.
Yes, you got 30 days because it's all 1 month. Yeah. Within 30 days. This guy says you can pass it in 1 day. So if 1 day you make 1.5, you've passed. Top step says you have to pass it within 2 days. Okay, 50%.
Like minimum of 2 days, maximum of 30 days.
Yes.
Okay.
And each day you can't make more than 50%. So if you make 750 today, tomorrow you make 1,005, then you have to trade day 3 to make 750, right? If you make 3 grand in 1 day, right?
What will happen?
They will ask you to trade extra 2 days, because you have to make sure that any profit you're making cannot be more than 50% of your profit target. Why? Because they want you to demonstrate consistency. The goal is to show
Oh,
consistency performance over time, not rely on one big trading day. These guys
okay.
rely on one big trading day, which is minimum day to pass is one. So you might wake up on Monday and you take one or take two micros and then it runs from to 1,500 or whatever. Okay. So this is how you,
Question.
yeah.
Sorry
Go
again.
on.
Like if in one day you get 2,000,
Yes.
that's for the other one, trade stop or something.
Offset. Offset.
Yeah, top step, yeah. And then the next day you get another 2,000. Like, it runs fast. So before you close your eye, open your eye, it has gotten to 2,000, and the second day 2,000. What are they going to do?
They have the extended days you need to trade. They'll
Okay,
divide,
okay.
yeah, they'll divide what you're making by the number of, so if you made 4,000, right? Then they would need,
Yeah.
then how long would it have taken if you were making 1,500 a day? So so you have to trade two extra days or one extra day. Yeah.
Okay, okay.
So what you can do, which is what I really like in Top Step, is you can set your maximum profit limit. So for example, here, I don't want to make more than 4,500 a day. I don't want to lose more than 3 grand a day. So I can set it. So I just go to settings, risk settings, maximum drawdown, 3 grand, maximum profit 4,500. So if I'm in a trade and it gets to 4,500 profit, it would close automatically. If I'm in a trade and it goes to 3,000 loss, it will close automatically.
Is this available in Apex too?
I think they do. I haven't tried. Yeah, I think they do. I think they have it at Apex. I think they do. Hold on. Sorry. Um, yes, I think they do. But you have to once you buy. So for example, once you buy, you can pick the platform you want to trade on. Well, charts, Tradeovate, or Rhythmic, and then when you click on it, so let's say for example, you want to trade on Tradeovate. Blah blah blah. Select country. Let's see, Nigeria. Oops, I've taken Nigeria out. God damn it. Country is fighting against everyone. Let's see. No, it's not there.
When they take us out, what happens to people that were already there? Do they kick them out?
I don't know. I don't know actually. So maybe we can look at what's the other one we're looking at.
So we can't use Apex now.
Hold on. Maybe you need to maybe you can. I don't know. Let's see. Did I click on Rhythmic? Oh, charts. This user account going to be owned by a company? No. Because this is M, no? So God damn it. You
Not
guys,
dead.
unbelievable. Hold on. Jeez, man. This is what when they say the country is fighting against success, it is futures trading for Nigeria platforms. Bar Ava futures. Oh, okay. You can connect this to it says you can connect this to oh no. I think it's gonna be um bro. Might have to do more research. I'm gonna ask admin to just do some research. Okay. I don't think you can I don't think it's possible. I don't think you can trade from Nigeria. I know you can trade funded next. I know some friends trade funded next from Nigeria. This you can, right? Preferences. Sorry. I used to work in advertising and I don't like all this nonsense. Okay. Futures. Trade currency futures and get rewarded. I don't want to trade futures. No DLL, no consistency after passing. All right, we need to do some more research to discover where we can trade. Okay, I think let's see, get started. That's ridiculous. No one should be paying this. Actually, I shared CFDs because you can trade CFDs because they're super cheap. It's just ridiculous. Nope. we need to do some research because if we can't trade, because if they're saying top step and to trade, let's say this one, I'll probably ask admin to do some more research to see if we can find. Let's see. Oh, these prices are outlandish rather. No one should be doing this. Let's see. There's a main. Nope. We need to look to see how you can register with Apex because this is super cheap. There are tons of other really affordable prop firms that we can use. Yeah, let's do the research and find out, and then we can let you guys know. Because I used to think, I mean, I know you used to be able to trade Apex from Nigeria for sure. I knew that. Alpha futures. Start evaluation. This is too pricey. That's not what you want to do. All right, let's look for it. And then if anyone finds anything before we do, please share in the community. Okay. All right. One more question before Jen, because I've been talking for 3 hours. I'm exhausted. Any other questions?
Double confirmation. So the actual money you lose, if you lose like, it's like $50. If you get the 50K prop firm and then you're not able to, you lose
That's correct.
more
That's
than the targets. The
yeah,
actual, like your own money is
yeah.
$50.
That's correct.
Okay.
Yes. So it's the money that you use to buy the account that you're losing, right? It's the money that you use to buy the account that you're losing. So yeah, so that's what it is. So whatever account, but obviously it's you know how trading is. I mean, you guys now see how trading is. You don't want to fall in a situation where it becomes addictive, right? It's only $50, it's only $25, it's only this, it's only I don't want that. I want you guys to be good. I want to try to pass it in as little time as possible so that all of us can trade it. Okay. I'm disappointed at Tradify. Let's see. Tradify. Okay, we need to okay. Let's see. Jesus. All these prices have jumped up. 1,005. They're all the same. 3K, 6K, 9K. And then reset fee is 215. This is 65. Right. Okay. Activation fee none. Minimum contract is 1 mini, 10 micros. Or maximum contract 1 mini. So you take 1 mini, 4 minis, 8 minis. Save $38 with June. That's ridiculous. Trade of a, it's not even cheaper. Okay, we need to do some research. We need to ask, I'm going to use we'll do some research and then we'll see which of those we can use. And if anyone finds, please let us know. Right. So yes, to answer your question, you only lose the money that you used to buy the account, right? But I want to make sure no one is jumping in and just buying accounts and blowing account and buying and blowing and buying and blowing. That's ridiculous. Profit match. So it says that people in Nigeria can use this, but years in operation. I don't trust this people. How can I change it? Trading Pete's Blueberry. No, these are don't need these. Trading Pete futures. So this is something you can look into. Let's see. Oh my God. My laptop is going to be shrinking.
Is there a limit to how long you can hold an account? Say you never lose less than more than 2K. Can you hold it for like a year, over 2 years?
Yeah, but I think they're saying you have to trade at least once or twice a month. So you can trade
Okay.
and get $10 and move on and leave it, and then another $10. But I'm sure they will check in on you and go, hey, what's going on? Right.
Okay.
I think so. But I think you can hold it for as long as you want. Yeah, let's see. Start trading. Let's see. It's too expensive. Why? This is maybe I need to open my own futures account, bro. Just pay because what the hell? This is a European account. They're charging. No. let's find something. We're gonna do some research because I'm pretty sure people trade. I mean, open an account where you can trade. Even the lots are super cheap. I know. Funded next, you can get some. You can. I remember. So even with CFDs, you can trade futures on CFDs. It will be XPX that you will trade here, but these amounts are ridiculous. I mean, how are you charging $50? Might as well use the $50 to open Top Step. If you got $50, might as well open this. $50, what is that? 80K? Okay. Well, anyways, so this is it. So this is futures here. Have you guys enjoyed today's session? Has it been very impactful? Do you feel like you have a better understanding of of um of futures? I'm going to share this with you guys so you can have that to hand so you can refer to it. Yes?
Yes, on my end, yes.
Yes.
Good.
Yes.
Amazing.
It's also one of those things that you have to get into it to
Yes,
then we'll
yes.
start hearing your voice in our head. Say, oh, this is what you do.
But I want to make sure next week what we can do, we can start with just go on TradingView, right? And just connect and we'll just trade because it's the same thing. Connect on TradingView, whatever you're making this, where you're gonna make it. So that way we can obviously try to get better, try to improve. And once we get there, then we can do what we want. Okay.
Okay, so we're gonna paper trade futures on TradingView first for a while before we
Yeah. I think
try to.
I think that's better because you can understand price. I mean, you already know how he moves. The focus now would be on what the lot says, what the lot is saying when he moves, right? Because if we're buying and it's each lot is 12, yeah, they need to know what you're doing. But it's the same level we're trading. There's no difference. The same level we're trading. Same level.
Okay.
Okay.
But Charles, all these platforms, don't they have a way of mirroring an account that is not your own? So that when you're doing, we'll just be mirroring what you're doing if you let us. Is there
That's
no way they can link?
the Nigerian speaking. No, you can't. Because they make their money from you having multiple accounts. It's not, I mean, we can, it's the same. I mean, we're not mirroring options, right? But we know what we're doing. We're saying we're watching, say,
Yeah.
yeah, we're not mirroring. You get better. So the goal here, right? Because first of all, that's you trading with people's money, and I don't have the license to do that, so that's not right. I can't do that here from a regulatory perspective. That's prohibited. If I wanted to trade on your behalf, then I have to go and get license from I think here we're in the UK. I'm going to get licenses from the Financial Conduct Authority, get from the London Stock Exchange, get because I'm trading US markets. I need to get those licenses there. I can't do that. What we can do is educate you. That's why it's largely an educational platform. We don't trade people's minds. But we can, I mean, you don't worry. Let's get through the sessions, start to trade, understand what it
Because
is.
the way that thing is moving, it's not moving like the normal
Yeah, that's
when you
how,
were doing it. I don't know if it
yeah,
was fast forwarded. It was
yeah,
moving like SPX, the way
yeah.
SPX moves.
Look, yeah, it moves like XPX 100%. So you got to be careful. But that's why we trade the smaller one. That's why we trade the minis, right?
Yeah.
That's how we trade the minis because micros are just wow. So we trade the minis, which is like each tick is 125. I'm pretty sure we're comfortable in losing. I mean, 125, even though you could rack up quickly. 10 ticks is like profit.
I think you mean the micros, Charles.
Yes, micros. Don't listen to me. Yeah, micros. Yes, just to be sure, micros. Yes, I think
Okay.
that just tells you I've been talking for 3 hours, so I gotta catch my breath. But look, let's give Monday a go. Let's see where we land. Hopefully, we can be better, and then in a month we know where we stand. We can start taking chances and getting in. The goal is for us to get funded accounts, make some money, move the money into maybe your options or do whatever you want to do, and then you're fine. So that's the goal. Okay, that's where we're heading to.
Okay. Thank you.
Okay.
All right, guys,
Thank
I'll
you.
give you back some of your time in the weekend. I think we've gone past 6 time, but thanks for jumping on the call. Enjoy your weekend. Stay away from the screen. Yeah, so
Most of us are
Okay.
on the
Thank
screen right now.
stay away from the screen.
He likes us to rest weekends. Well, thank you.
Thank
All right,
you.
Thank
all
you.
right,
Thank you,
bye.
Thank you
Charles.
so
You're
much.
welcome. Bye.
Bye.
All right, bye.